Good morning.
Hey, good morning, good morning.
Oh man.
Good morning, good morning. We have a Friday here. Um, yeah, it's Friday. I'm in a buy over here. Price close at support on the 1 hour. So, this should be a high chance for price to continue moving bullish. Yeah.
Rick, good morning.
Hey, good morning.
Oh, you're in a buy already.
Yes.
Nice.
Yes, sir.
Oh, you're only 1 hour. Okay. Yeah, that makes sense.
Yeah, I
Good.
think it makes perfect sense.
Good morning.
Hey, good morning.
At 132 900, we get a VTP.
Yeah, I'm aiming for like 770.
Okay.
Around 770, 780. That's gonna be like around 10 pips. I also increased my lot size here today too. So yeah, it should reach there.
Yeah. Thing is, like, when you go on the 15-minute, it looks like you're in a range. But now that you look at the 1 hour, it looks completely a lot better. It's breaking resistance and going for the wick fill.
Yep.
It's so crazy how you go back on the 15 minutes or the 5 minute, and then you see like how it's so cluttered up. And on the 1 hour, poof, it's so clear. Today is gonna be very interesting.
Coming up to around 10 pips over here, which is beautiful.
Nice. Nice.
Oh, nice.
Morning.
Hey, good morning, good morning.
All right.
Morning.
Perfect. Putting stops at break even here. Secured 10 pips. And perfect. I increased my lot size to 10 lots today, so it feels good to win on a 10 lot.
Mm-hmm. It should continue up though.
Yeah, it's okay.
Yeah, it looks good to go up.
Yeah, it looks really good to keep going up.
Good morning, guys. Good morning, Raja.
Hi, good morning.
Good morning, good morning, good morning.
Good morning.
Coach, are you?
Yeah, so basically in London session, I was watching Monty's stream and price was way down over here. So I was waiting for a resistance to form to continue down. But then candles just started closing back in the range. So I was like, okay, well, this kind of closed bullish on the 1 hour.
Oh,
I looked at the 15 minute, the 30 minute, they were pretty messy. So just took it based on the 1 hour. Stops below here, took entry, went to 10 pips, put stops at break even, and it's a free trade now.
good trade, Coach.
Yeah. Good trade.
All right, let's take a look here. Ooh, GJ, 30 minutes. Look for sales at this area, clean traffic below this area. Okay, looks good, looks good. Possible to look for a buy if candles close above the resistance and go back to a range, or would you choose to wait for a break? I think when you're looking at GJ, this was a support being created right here. Because if you look on the 1 hour, you see that the support was created. That you had the support created right around here. That was the support created based off the 1 hour. So I mean, now if you see this kind of is breaking up, then you would want to see like a little retracement down and then a continued move up to fill this way. Like if the small time frames don't make sense, then just look at the high time frames. Like if you look in gold over here, the 30 minute, 15 minutes just dirty. There's like no confirmation, nothing. If you want to force a trade, you can do that, but this is pretty dirty here. Looking at the 30 minute, kind of like a lot of wicks, candles breaking up and down, makes some sense. But looking at the 1 hour, it's very clear that okay, we have a resistance forming. Previous 1 hour candle closed bearish. So unless this resistance, well, till this resistance is held, price should continue moving bearish, and then you're looking at these wicks as destinations.
Wow. GJ is going back down.
Oh, really, Mac? Oh my God. Where'd you see that?
I'm not gonna answer that.
I don't see any good setup for now. Yeah, I mean, I took a buy. Now it stops at break even. If it heads up more, perfect. More win here, but if it comes down, stops me at break even. So, but this is the range GJ is in right now. The only reason I took this buy was even though it's in a range, this is a big range. This is a 40, 44, 45 pip range. So when you have a 44, 45 pip range, and if you take a buy from support after a confirmation like this over here, it's easy to get into like 10, 15, 20 pip profits. It's really easy. But when the range is like, let's say if this range was around 20 pips, let's say this was 20. Actually, you know what? Let's take a look at a range that is 20 pips. 20 pips or less. So what's going on over here? Let's go to, so go over here. Let's go to, do you think the 4 hour will flip bullish? I have not even looked at the 4 hour. I took it based on the, yeah, okay. So if we're looking at this here, USDJPY, right? So let's say that we have a support right here, and we have let's remove this one, and you have a resistance here, right? So if you measure this range, this is a 12 pip range. So if you take a buy from support, you cannot get 20 pips out of it because this is a 12 pip range. You can maybe aim for like 5 pips, 6 pips, because once price comes in the middle, it's bound to do some sort of retracements, come up, come down, and do that stuff, right? But when you have a bigger range like this, then you have the opportunity to grab like maybe like 15, 20 pips, something like that. So that's how you trade ranges. You see how big the range is, and then you execute from the top or the bottom. Because if you're executing from the top, the probability of price going down after resistance formed is much higher. But if you execute somewhere in the middle, then the probability to go up and down is like 50-50. You're not really sure. So then you just gotta wait. Alright. GJ, 1 hour. Consolidation. Target. Break support. Look for retest. Perfect. Yeah, took a 3. Let's take a look at the 4 hour. Yeah, 4 hour closed above support. So this is a very strong support. 132,600. This support was held yesterday as well. See, yesterday it came down. This is sells we took, and then it went straight up. It came down again, closed it, so now it's just ranging here. Plus, also it's a Friday. You know, if someone is looking for trades, I would say maybe like look for one trade on Friday. That's it. If you really want to trade.
Yeah, this is a 30-minute close down bearish.
Key level of protection, retested low, sell stop below previous candle. Yeah, makes sense. US 30. Also, if you see a resistance forming here, then you could also execute a sell with stop above that candle. The bearish candle with a long lower wick. Long lower wick, this one? You haven't specified which candle, so I'm going to try to read your mind over here, and I would say we're thinking about this one. Yeah, so this one price came down, but it closed back above support, so this means support is established. Well, and then you had this candle closing above same area, so now you say, okay, the support is established on the 1 hour. So the probability of this 1 hour candle to continue bullish is much higher than heading down.
Yeah, I entered, but I put a small lot size.
Oh, nice.
Yeah, my entry's at 132,730.
That's good.
Going for 10 pips.
Oh, wrong chart.
Very nice, Mac.
Whoa, that was loud. Who's that? Carlos?
VPK, man.
Carlos.
How you doing?
Good.
So no news, US durable goods, and that's about it.
Yeah, I think my stop's pretty good. It's like below the previous 1 hour candle.
Let's take a look here in the 30 minute. Ooh, 30 minutes is respecting that area. It's created a resistance over there. I think my run is going to get stopped out.
It's gonna go up. GJG Cat's gonna go up.
It's gonna go up, but
At least 20, 30 pips.
I think you need to share a chart before you make comments like that.
Oh my God, you're right, Coach. I apologize. Can I share mine? I will right now.
Yeah, for sure.
Yes, please. And I'll share mine. Look, as I give back to you.
Do you know why people lose to see the obvious to do it outside the box? Yeah, I think they get stuck in what they really want, and they don't see, which is very obvious. Oh, my runner got stuck out here. Yeah, so they don't see what's most obvious. Like, what most obvious here on GJ is that we've created support on the 1 hour, but the 30 minute it closed, like you had this candle respecting this resistance, then this candle closed like a doji. This was the start of the 1 hour, so I expected the 1 hour to go up. I entered, went up 10, 11 pips, whatever, secured, and then this candle closed bearish, and this candle is now open too. So I think a better buy would be once we start breaking above 132,750.
132.
Yeah, I think that would be a better buy.
And as long as it's respecting this area around here, should be good.
Yeah, the reason I say 132,750 is because that's when the 30-minute candle will start to go bullish. Because so far, the previous two 30-minute candles closed bearish.
But they're weak.
Take a look here. Oh, okay, it's the same chart here. What's this? Candle broke below anticipated move to breakout, start running to the target, open the one position. Stop me out, random hard pullback. Yeah, I think your stop was way too tight. It was a way too tight stop loss. It should have been above the previous candle. It was right at it. I mean, when you're placing stops, I think stops should be a couple pips above the candles, or a couple pips below. Yeah, now it's ranging. When it was moving up, I was expecting this 30-minute to close bullish and then to re-enter and then continue moving. But since it's going bearish now, the probability of going up is decreasing. So this is what it's in right now. 30-minute candles, they're respecting this area, 132,750.
The 30-minute bottom wick and just getting going up.
Yeah, I've seen this setup before. Like it makes on the 30-minute, kind of like a ladder. What is that? Oh look, it's flipping. Haha.
Yeah, nice one.
Yes. Because look on the 30-minute, Rakeel. I'm gonna show you something. I don't know if you believe in this.
Bro, I'm looking at the 30-minute.
Oh my bad. My bad. I was on my chair. So have you ever seen the setup before where candles form like this? Like it's a slant like that?
Yep.
Yeah, you've seen this before, right? Meaning that the next candle will go like that, right? Like for the wick.
Yeah, but so you needed to break this minor resistance.
Right, but you need to close above the ear. Like how it's doing right now, if it closes like that, I've seen this setup before, and then it's gonna spike up and continue up, basically breaking above here, and then the next one will continue up for the wick fill.
Perfect.
But yeah, I've seen this setup before here, like this, these candles forming like that. So I stayed in, I didn't close, and now I'm in profits.
Mac the Dawn.
Very nice, Mac.
Thank you, thank you, thank you.
If price stay above, possible move up. Yeah, I think since it's Friday, you've got this resistance here in 30-minute, then you got all this mess over here. So I think above that mess, you can have a profitable trade. I think a better trade is going to be right over here in this area here. Because once you move away from this consolidation, this consolidation, this consolidation, then you come into the clean candles. So then you can have like a clean candle heading up. So if I was here, I would probably wait a little bit. All right, what's this? GP CAD.
So I'm waiting for like support to form on that green circle, and then sell a buy clean traffic to the top.
Nice.
That
So,
looks good.
so what would be your confirmation of support?
Oh, I would go to obviously the last 30-minute candles have forms support, but then since it's at a key level, 73,500 is a key daily level. I go into the 1 minute and I look at price action in the 1 minute. What the 1 minute's telling me. Once the 1 minute candle breaks the higher high, that's my chance to enter.
Okay, because it does seem like if it creates support, it should continue bullish.
And also because I've been watching this pair for like a year and a half now, I know how she moves, you know?
Yeah, yeah, you have.
Yeah, you have for real.
I gave up UCAT. I'm just gonna trade GCAT. That's gonna make my money. That's gonna pay my bills.
Nice. That's good. Stick to one. Now, do you see how the 15 minutes going above
Oh,
resistance?
nice.
Yeah. So I'm gonna go enter again for my next position because I'm very, very secure that it's gonna close bullish and continue up.
Not secure, confident.
I'm very, very secure. It's gonna.
Yeah, I'm very confident.
Yeah, I think it should be good to go to 132,900.
Yeah, that's where I have my TP.
But we could have a plan. The market does what it does. I'm
Okay.
confident though in my, you know. After seeing it so much and seeing the same thing over and over, it's like Raja said in market fluidity, and what he's always preached to us is like the market repeats itself, history repeats itself. But once you see things move the same thing over and over, you get confident in your analysis and trades.
Yeah, that's why I'm doing my second position now. But
Right.
to be honest, I should have just waited for this 15-minute to close.
Yeah, you got. Oh well, we'll see.
We'll see.
AUD USD waiting for break above to buy. It's partial TP here, higher time frame zone over here. Perfect. So stop loss is going to be down over here. Looks good. So you're waiting for a candle to close above this area.
I got my stops to break even.
Oh,
Yeah.
now the 30-minute MAC for you is perfect. Broke the
Yeah,
high.
no. Yeah, broke the high. The latest end position, it's already in profits, and I'm already up 7-8 pips on the first entry position. On the first entries, yeah. So basically, this is my chart. I'll send it to you. It's on the Zoom.
Oh, nice. We have the Monty donated 25 quid.
No
Perfect.
way.
Oh, wait.
Starlings.
Good morning, good morning.
Good morning. He was
No.
quiet and donating.
Now
That's
all
payback.
now all I gotta do is wait for CAD to go down and then convert this to CAD.
I think you sent me about £3 earlier.
Yeah.
And you guys were donating to each other.
Yeah, there's a little bit of a game going on.
We're doing some tax laundering. Oh, you boys. They're laundering some tax money.
I never thought about it like that. Probably could do that.
If they were doing that, Mac, you just snitched on them. Great.
Yeah, big time. You know what I'm saying?
Yeah.
100%.
Wow, look at this guy. Wow, we're in a family here, you know. Out.
Yeah, you know this GJ here, now that it's moving up, it makes sense now more because this was a fake out here. It did a fake out, came up. This candle's about to close soon, and man, it just looks perfect to head up.
Look at the chart I sent.
Let's take a look here. Oh yeah, nice. That should get there.
Good morning, fellas.
Good morning, Kev.
What up, man?
What
Morning.
up, Kev?
Yeah, 15 minutes about to close bullish, so I'm confident. Next one will keep on going up.
Anyone been watching gold?
The rakeel was.
Oh, okay.
Yeah, I'm looking at gold for buys.
Mm-hmm.
Anyone watching EU?
EU?
You?
Why nobody watches EU?
Oh, true. Damn, I just popped.
I was actually hoping gold pushed down to like what's that?
Perfect. So
1702
I'm about
for a
to
swing.
I'm about to hit GP. I'm sorry. Should I close now or?
Yeah, I think you should close now.
Yeah, because now it's getting to that range to the
Yeah.
zone. So
I've already closed and secured. so-
Yeah. Well, whatever. $150 for the day. Chilling.
Beautiful.
Yeah, because it's getting to that zone here, and I'm not liking it. You see what
I
I'm talking
took off
about?
at 85.
Yeah, you see what I'm talking about, right, Vincent? That
It's
Yeah.
gonna fill the wick here.
yeah, it's gonna get to the wick and probably head down or get back up in that range. And I don't want to get stuck in the range.
Yeah,
So,
nice
yeah.
one.
Yeah.
So I closed and that's it. This range here. That's what I don't want to get stuck in. So I closed here.
I got like 10, 15 pips off that.
I got 13 pips on the first entry, and I got 6 pips on the second entry, which is one lot.
Nice. Yeah, I'm done for the day. Just
Yeah, I'm done for the day too. It's Friday.
sit back and watch the show, you know?
And play Warzone.
Yeah, I'll play more often this weekend.
Okay, just playing
Well,
fighting.
Who's
Someone-
talking besides Mac? I want to know who's that.
Vincent.
Oh, Vincent.
So over here, someone's looking for cells. I hope you're not in cells right now. Daytime, 4 time. Yeah, I guess you're waiting for this thing to break. Then makes sense for cells. The support breaks. My thoughts on EU. Take a look here. Wait for a close above this 30-minute resistance to look for a long to the possible 4-hour resistance, clean traffic to the left. Yeah, I think it's good because now when you see is what price is doing, it's making a high. It broke above this resistance you had marked, broke above this resistance you had marked. It's kind of like making a high. Whenever price makes a high, it always comes down, creates a support, and then there's a very, very high chance price will always retest the high. So that retesting of the high is basically your trade. So at the same time here, like on the 1 hour, we had this wick, right? The price went up, made a wick, came down. So in the small time frame, it created a high. And on the higher time frame, you just see a wick fill, but on the smaller time frames, you see price retesting the high. So that's basically what a wick fill is. You know, price goes up, comes down, creates a support, continues up to fill the wick on the higher time frame or test the high on the lower time frame.
$15 closed without a wick, so I'm getting out.
Yeah, so I got out right on the before the wick fill.
Nice.
Since it got to that range area, and now it's retracing. So I'm not gonna take any risks. So
If I got in here, should I exit now? Well, if that's what you're thinking, then that's what you should do. Basically. We're also approaching this resistance area. But if you want to hold, if you think it's going to continue further, what you can do is you can put stops at break even and just let it do its thing. And if it continues to go, then you can say, oh, look, I caught a swing trade. But if you close out and if you don't put a stop set, break even, and if it continues to go up, then you're going to be like, oh, man, how can I hold swing trades? So you put stops at break even and let nature do its thing.
Yeah, yesterday I took a good loss. This whole week has been so perfect on GJ. Have you noticed that? And yesterday started like doing all these weird retracements.
Morning, gang.
Morning, yes, sir.
Morning, bud. Did anybody's 15-minute chart gap up?
Yeah.
Okay, yeah, that's what I did as well.
Oh, nice. This AUD USD chart. I remember this chart. Close fold because I was anticipating a 15-minute pullback that would take my run out. Okay. Nice. There's your wick fill right there.
Nice.
Continuing up. Perfect.
Projection complete.
GCat's still waking up. Don't worry, she'll wake up soon.
What about Euro USD? I think you need to post a chart about Euro USD. Do you guys still enter in M5? No. Entries, this is the thing. There's no such thing as entering on M5 or entering on the 1 minute, because whenever you think about entering positions, you're first thinking about your stop loss. That's the first thing that you're thinking about. Like, let's say here, right? GP CAD we're looking at. If for some magical reason this candle does close bullish, then you think about, okay, maybe my stop is going to be below this candle, and then we can continue on up. And then you're not thinking about, oh, okay, with the 1 minute or the 5 minute or this and that, because those are very risky time frames. But if you have experience with that, you can make it work.
Mm-hmm.
Or use it for additional entries. If you're getting like a bit of resistance or a support forming, you can have an additional ones, yeah.
Oh, so it played out nice. Anyone on YouTube who took that trade, give it a like. We made money on Friday. Freaky Fridays.
Smash that like button.
Yeah.
Ooh, what's this? GJ 4 hour. Nice. Beautiful entry. Yeah, I think you'll be pretty lucky if we break this resistance and price continues to go up. So maybe having stops at break even would be perfect there. Let's take a look at the daily. Daily did see. Now here's the thing. This daily candle on the 21st April closed below this support. Then you had this daily candle close day before yesterday. This is the yesterday daily candle which reacted to yen news and went up. And now this is the Friday daily candle about to close. And this is interesting because they're closing above the support. So if it starts to go up, it's possibly going to come up to 133, 300 or 400. Looking at it on the 4 hour, that's above 133. So that's a very strong resistance here now.
Gold's going real well. If you're still watching it, by the way.
I'm still getting mad spreads on gold.
Mine weren't too bad today. They were under 4.
Yeah, I'm in a 4 to 6.
Mm-hmm.
$48.6, 4.7 then? 4.6?
Yeah, once this 30 minutes candle close and we pull back to Roger line, I'm looking to take bias.
Mm-hmm.
Nice to get a solid push right at the end of the hour. Would be nice.
Yeah, gold is pushing over here. GJ is also trying to push further.
Yep. Waited all morning for that.
GJ buys. How about this analysis? Let's take a look here. Price broke yesterday's value 1. I honestly can't see shit over here. I can't see anything, sorry. Right? Like, the color combination is not the best.
Oh my god, this is... Oh, we've seen a chart like that before with the thing on the side.
Yeah, we've seen this chart before. Wait for retest, got in a buy. Yeah, I think... Yeah. See how nice you can see this chart? You can see it's so clean. And you look at it, it's just can't see properly, I'm sorry. Not trying to roast you, but just being very honest. Just can't see shit.
The wicks are very thin.
Is the market fluidity wallpaper still available? Yes. Alright, what's this?
GG's still going.
Mm-hmm.
This is GJ 30-minute chart. Ooh, you bought over here, held stop loss down over here, and you made it. Perfect. Yeah, Alex, I think you can have a good trade, you know, if your stops are at break even and we continue through. Once it breaks 133, man, if you're still holding GJ buys, you're good. I mean, this has room to go further up. Alright, what's this? GJ. Range between 133, 300 and temporary zone. And then choose. Better sells with further downside past this zone. What's this big blue zone over here? I think you're sort of missing out on certain moves by looking at the chart so zoomed out. You know, because if you zoom in, you'd be able to see candles more clearly.
It said a zone who issued pandemic alert. That was on the news. You see where it says there? Zone where who issued pandemic alert.
Yeah. The World Health Organization said.
Yeah, but that was today? I mean yesterday?
No, March 11th.
Oh, okay.
Coach, someone asked what's the difference between market fluidity 1.0 and 2.0?
They're the same. They're just webinars. Yeah, they're just 2 webinars. Webinars don't make you profitable. That's the thing. This, what we do here every day, this makes you profitable.
By the way, those are really 2 good, really great webinars.
Yeah, thank you.
Like look at it, look at those webinars as like studying the test, and this is your test every day.
Just a Ooh, USDC HF. We got some.
What the hell is that? Is that the coronavirus bat cipher?
I don't even know what's going on here. I think looking at chart this way is a very toxic way to read charts. And the long-term profitability by looking at charts in this fashion is very low. So that's what I think.
It's like a dodgy love child, you know.
Yeah, do you love child? Breaks above. Oh, very nice. Man, I want to see ideas. I don't want to see trades you guys have won. Come on. You were trading for 4 years, and last year January you started trading. And last year January you started trading profitable. No. 2017. I think this Forex 1-1 is a troll. We'll give him a benefit of the doubt and then gone. Alright, let's take a look at this chart here. USD CAD, I'm noticing price this, close this. Oh, nice. Perfect. So we're gonna have a guest here in 30 minutes. It's basically on options, trades options, and we're gonna be talking about how you can, use options to hedge against Forex. So it's gonna be pretty interesting discussions coming on.
Oh, she's late?
Yes.
She's late? No, that's not a good impression. Okay.
Alright. I'm gonna mute Mac here in a bit.
Yeah, I'm gonna give. No, I'm actually. I'm gonna mute myself. Don't worry.
Thank you, please.
Okay. Yeah. But if I want to ask a question, am I allowed to ask? No, let's just not. I'm not gonna ask him.
Look for support to form to go along. Yeah, this is a nice idea here. Now you're looking for a support to be formed to continue up. Then again, so it's 7 a.m. right now, right? 7 a.m. right now, and this is a resistance you have here. So maybe this resistance might get broken with the volume push from New York. That's what might happen.
But it is an ugly range though there.
Yeah.
That whole range.
This whole range is now ugly.
Chris, what happened to your voice?
132. I'm gonna start scaling and go.
Yeah.
I mean 1732. Sorry, 1732. I'm gonna start scaling, and when it comes back down.
Yeah, it looks like it's not gonna pop. So you can.
It's good if he's retracing a little bit down there now, just before a New York Open.
Yeah.
Because he might just get some more orders, and then it will just pop up.
Oh, someone donated $4.99. Raja, is it true if Trump catches Corona, G will go up? I had to read that because of the donation. Possibly.
You interested? He said I have to read that because of the donation.
Man, I thought you were gonna mute yourself.
I'm gonna mute myself when this person comes in.
Oh, wrong chart. Fill the wick. I think that wick can be filled once you break above this resistance. And you can find more information on the 30-minute. Well, you are in the 30-minute, maybe the 15-minute. If you see that, the candles are making higher lows in the 15-minute, then you can expect the resistance to break. Kind of like here on GJ.
Someone got in a trade?
Oh no, I'm just adjusting stop loss. My bad.
Nah, it's always happened to me, so I muted the alerts. Like, oh, Mag is overtrading, and Mag is overtrading. And yeah, those were my overtrading days, kids.
Hey Raja, please check this for me. Let's see here. Clean traffic if you look left. Wait for this price to break this resistance to go up. Target this price. Yep, this looks good. Break above this resistance, you have a clean traffic going to 133, 300. So it's a 30, 40 pip range here. After this resistance breaks, 35 pip range. That's a decent amount. What's this chart? Buy in this zone. How can you even read this chart? How do you even know what's going on in this chart? I mean, imagine I started the stream with charts like this. All right, guys, so we're gonna draw our support resistances. I mean, do people don't know how to even scale charts to read them? This is insane. This is so scary, man.
Let me see it again.
I think those charts were like Corona. They got caught Corona.
Yeah, I don't know. I mean, when people look at charts, you need to know how to properly look at the candles. This just makes no sense at all.
Oh, but we see a chart like that before yesterday, right? Somebody did something like that too. It was like a line and said buying zone.
Buy stop above resistance on all time frame. GJ. Yes. See, the problem is this is a strong zone. So this strong zone should get broken in NY open in an hour.
And that's where I'm looking to take buys at also 133.50 above that right there.
Yeah. Makes sense.
Because right now we're kind of like retesting in that 4-hour range. So unless we break that 133.60 area, then there's no buys.
Serious question: how to stop yourself from overtrading? Just stop. Struggling with discipline. Oh, okay.
I mean,
yeah, you just gotta stop. I took one trade in the morning and that's it. Now I'm not gonna take any more trades. So I just stopped.
Raja, you were up early this morning.
Yes. Yeah, I was eating.
Okay.
This is goat shit.
Oh yeah, because Ramadan started, is it?
Yeah, exactly.
Oh, okay.
Yes, sir. Looks like everyone has almost the same analysis on GJ. This resistance is uniform across the board.
Daily's flipping bullish.
Yeah.
4 hour, it's made a higher high than the previous one.
Yeah, I just got this
Yeah.
resistance here in the way. Ooh, wrong chart.
Roger, I'm just looking at trailing my stop loss. Do you think obviously it's just before New York, but should I put it below the last 15 minutes? I'm still 4 pips profit where it is now if anything goes wrong.
Yeah. Oh, you're up. You're in 4 pips profit.
So I'm in at 132.566, and I've got my stop loss at 133. Yeah, I've got my stop loss at 133.600.
Yeah, it's still good. It's still good because if you bring it below the 15-minute candle, then you might get stopped out with the the retracement.
Yeah, I thought so.
Yeah, so keeping it wider, aiming for like a break of this resistance would make much sense. Like maybe have it at like 132, 750, 700.
Yeah.
Yeah.
Well, there was a like a zone around 700, so maybe just below that.
Yeah.
I took some profit anyway, so it's like a smaller position. Anyway.
Oh, okay, yeah, that's good. Then you're safe.
It's just 1/5, yeah.
Place a buy stop above the high of this candle. Is it a good setup? Yes, this could be a good setup. But at the same time, we got news at 8:30, so that could, play some sort of things in the US dollar. Is the overtrading PDF still available to purchase? No. Ooh, what's going on over here?
My first position got triggered. And go.
For buys?
Yeah.
Oh, nice.
Oh,
Yeah.
that PDF, Roger. How did we get hold of it? I mean, I think I bought one.
Yeah, I think log in from your computer or check your junk mail.
Which one? Oh, in the email, yeah. On
Yeah.
the email. Yeah. Ah, okay, cool.
Looking for selling opportunities at this previous 30-minute support. Perfect. So you're waiting for candles to create some sort of a resistance here then.
It took me out in profit already. Wow. Damn.
Nice quick move.
10 pips.
Support being made. If support holds, enter buyers in 15 or 30 minute candle. Confirmation to retest the high. Makes sense, makes sense. Do we always clear away the zone from last week or previous day or redraw? Yeah, so every day when it comes to the charts, I just redraw my zones. These zones, I kept them as it is because, price respected them overnight. So there was no need to redraw these zones. And looks like we are breaking up here.
Damn.
Yeah, once this goes, oh, it's going now. So it should continue to 133, 250, 300. Should I wait for price to create a support around there or wait for price to break resistance? Let's take a look.
Ooh, I'm loving GJ.
Oh, you're actually gonna get on GJ. Good.
Yeah, I got gold for 10 pips. I had a limit order and it just triggered and pull back. It's a quick scalp on gold.
All right, now if it breaks out this resistance on GJ, you're gonna take entries or you're already in?
Now I'm gonna take it. If it closes above it, I'm gonna take entries on the pullback. Because right now, the reason why I took that small position on gold, if you look in the 30 minutes, we kind of have like a mini resistance right there, and the candle failed to close above it.
Oh,
so
no, I was talking about GJ, my bad. Like resistance.
Yeah, I understand.
If it breaks,
yeah,
you're gonna get in on the retest as well.
Yeah, so if gold closes above the 133.60 and I'll get a pullback, I'll get in on the pullback.
On GJ.
On GJ.
Yeah, you said gold.
No, I was talking about gold earlier before you.
Oh, okay.
But I was explaining my gold trade, the reason why I just scalped it for 10 pips.
Oh, okay, got it. So waiting right now for this to close and going for the retest below the resistance, getting buys, and then that's it.
So wait for support made over here, then I'm in the buy. Yeah, makes sense. I mean, it's Friday, and sometimes you don't get those nice supports formed, those nice retracements. So like sometimes when you miss a trade, that price just keeps on going. It's always better to look back and see that, okay, where could you have entered? So if I'm looking at this, if price keeps on going, I might be entering as it starts to cross this level and keeping the stop below here, taking sort of like an impulse entry to continue bullish. Those little things, you know, those little tweaks you learn as you go along your journey. All right, what's this chart? Let's take a look here. Enter buys if candle closes above resistance. Stop loss below breakout candle. Target next zone. Perfect. Looks good. Wow, Mr. Albert has sent like 3 charts so far.
Wow, different pairs or? Oh my God, buy this zone. That's the guy.
Buy if this zone breaks.
Bro, this guy has no enthusiasm whatsoever.
Yeah, I think buying after this zone break is going to be pretty hard because you have this resistance here and you have this. There's a lot of issues here. So I wouldn't want to buy it. Plus, also, it's a Friday. It's a Friday, you know, so no one should be forcing a trade. If you're forcing a trade on a Friday, you're taking losses. I'm sorry to say, but I mean, you had that coming.
Hey, Rakeel.
Hey, how you doing?
I'm all right, bro. Did you not notice that chart was of McDonald's? It was a stock, not a currency.
No, I don't look at those, so I'm not sure what that was.
No, the chart that you just marked.
This one?
Yeah, it was
The
some
guy
weird
that
chart.
was McDonald's.
Oh yeah, that's McDonald's. Yeah.
Oh, now I see McDonald's Corporation.
It's not even a currency; it's a stock.
Yeah, I don't know how this works.
So definitely don't flip it.
This guy, I think he's trolling because that guy he keeps sending those weird charts, and we're not even looking at the currency pairs.
But the stock market is not even open yet.
Yeah, it's not even open. 9:30? No.
Oh, what's this chart here? Buy when confirmation will come, retesting this level, key clear traffic. Let's take a look here. GU. Oh, wow, this is also running. Yeah, this called for an impulse trade. Yeah. This is when price keeps on running and doesn't give a retest.
Yeah, I got a position on GU as well. Same entry in the morning.
Nice. Do you look at the weekly candle at this point of the week, Thursday, Friday, for any of your daily analysis? Nope. Because if you're entering based off the 30-minute or 15-minute or 1 hour, then there's no point in looking at where the weekly candle is. Because 1 or 2 1-hour candles moving up and down is not going to really affect the weekly candle that much.
Yeah, you're ugly as Jesus. You look like Jesus.
Your JPY 1 hour wick fill. Oh, nice. So you got it. So what's this cloud here coming down, Bollinger Bands?
Tell me this man does not look like Jesus.
Mac, I think
My bad.
70% of the things that come through your mind, I think they should go in text. And the rest 30% should go in voice. That's a compliment. So
Yeah. Yeah,
yeah,
it
it's a
should have been
little,
like 90%.
yeah, it's a little
But
tip.
you
It should just go in text. So you're thinking about selling here on AUD USD 15-minute chart.
That's the same dude.
Yeah, it's the same dude.
It's a nice move on GJ.
Yeah.
Yeah, I'll just come back. I'll just sit.
Alright, I'll be right back.
Rakeel, look at GCAD.
Literally just said that he's gonna go get coffee. He'll be right back.
Oh shit, my bad.
No, I'm fasting. There's no coffee. Ooh, wow, look at that.
Oh.
Did pump up. Beautiful, beautiful. This candle is closing in 6 minutes above this resistance. If it closes above this resistance, there's a higher chance for it to continue moving up to 133, 350. Hey, Mr. Raja, I would appreciate it if you look at this, man. There's so many charts coming in here at one time. Let's see here. Take a look at this. Liquidity here, support times 3, will wick up to 1745, then drop to around 1710, shooting up to make new highs close to 1800. Now, this is a great analysis. Where are you taking your trade? Saqib Khan, bro, where are you taking the trades? That's the problem. This doesn't tell me where you are executing, how you're planning your trades, where you're planning your stop loss, where you're planning to take profits. I mean, it doesn't make any sense. So that was good analysis, but it doesn't help anybody. What I realized that there's a fake out if you take a sell, you're going to get a minimum of 20 pips or more billion drawdown. Yeah, I think what you need to focus on more is what causes the fake out and how you can capitalize after the fake out happens. Oh wow, look at this candle. It's closing below this 133 area, 133.050.
5 minutes, GJ could cross that whole thing and get the range.
Yeah, I mean, 5 minutes for it to close above that resistance. If it does, then you got a good chance for it to go to 133, 400. You know, as long as this candle closes above here, this next one could go like this. So just wait for this either 15-minute candle to close, 30-minute candle to close, and see if it closes bullish. You can take entries. Get in this 40 pip range.
You just break it down. Let's take a look at been watching US 30 for the last 3-4 days. So far, one day it had a move, second day it ranged, and now the third day I'm looking at it and it's having some moves. Interesting. GJ 15 minute. What's this? Previous area. London found a good price of support, rallied up, looking for buys. The price comes back down here during New York session. Expecting price to reject from here to get the pullback. Yeah, I think that's going to be a good idea because basically it's just making a high. If it comes down, creates some sort of support. Even if a support is formed around 132, 850, 900, 950. And then you can expect maybe the New York Open to push it further up and to continue up. That's only if the support is formed. Otherwise, it's just going to be in this range now. Take a look here. Wait for buyers to come back in and retest above yesterday's value area to enter long. Beautiful. So these volume bars, they basically tell you how much volume there is. Shouldn't these bars be at the bottom?
And normally they're in the bottom, but you could switch them up. You could put on.
Would make sense if it was at the bottom.
Yeah, like the MACDs and the RSI and all that.
Maybe they're showing the volume at a certain price. I don't know. Just making things up.
I don't think GJ's gonna close above resistance. So,
what time frame do you use to decide if the support was formed? Sometimes it forms at 15 minutes, but not at 1 hour. I think the best way to do it is to look for supports forming on your 1 hour or 30 minute, because they're more stronger supports. You know, the stronger support, you get better confirmations. If you're waiting for supports to be formed on, let's say, the 15 minute, 5 minute, I mean, you can get confirmations, but they're not as strong. They're not stronger confirmations. So we're waiting for the guest to come in here pretty soon. Her name is Samantha from Talking Options. We're gonna talk about how you can hedge Forex with options, and like sometimes, like I remember we had David on, and David talked about this as well. Like how if you're in a, let's say, a pound buy, you can basically hedge it with options. So this is going to be another perspective. Yeah, see the 30-minute candle closed below that resistance. Buys could get very tricky. Unless this 15-minute starts breaking up and closing up, then you can say, okay, you know what, now price can continue moving up. So you're still waiting. He's going to head up. Once it closes bullish, you're going to have confirmations. Once the 30-minute also here, I mean, if you have bullish closes, then there would be a higher probability for the New York Open to continue pushing it bullish. Hey Raja, can you check this chart for me? Oh, send it over. What's this? GU. Look for sell if the zone is rejected, maybe head and shoulders. Yeah, it looks good. Or what you can say is that maybe GU made a high above this resistance at 1.23560, and now you're looking for a minor support to be formed for a continuation bullish.
Hey Raja.
Hey Logan.
What would it take for you to decide that it's time to take sales on GJ? Would you need that whole range to be broken, or would you just need a couple bearish candles here in this 30-minute zone before you decide to take sales?
Yeah, so if you're looking at this area here, you probably want to wait for a 30-minute to close bearish to take sells. Oh. Looks like Logan went away.
No, I'm still here. I just didn't want to invade your chat in case my radio goes off.
Oh, you're still in the cruiser?
Yep, I'm working.
Nice. Working and working. When a range is broken, how do you predict if it's a breakout or a fake out? Well, if a range is broken, then it's a breakout, and then you go off of that. But if the range is broken, you can never anticipate a fake out, because a fake out is there to fake you out, right? So it's only a fake out once it comes back in the range, and then you know, oh, that was a fake out. That's like saying, hey, I'm playing soccer, and how do I make sure the other person doesn't, dodge me? And the coach is going to say, well, that's what a dodge is. It's supposed to dodge you. Are you looking for sells or buys? I'm favoring buys on GJ, to be honest. You know, but we need some sort of a. I mean, if this candle closes bearish, it might continue down because this is a strong resistance here. But if it forms some sort of support, then there's a higher chance for it to continue going up.
Mic check 1 2 1 2.
Mic check. How are you?
I don't hear anything. Let's see.
Hello. Maybe you have a mic problem.
Looks like he's still waking up.
I think I can hear you now. Can you hear me?
Yep, loud and clear.
How are you guys? Grand Rising.
Good, good. How are you?
I'm doing well.
Finally, we made it over here.
Finally, we made it over here. Exactly.
Yeah, so welcome to this stream. So we do this every day, you know, for like 4 hours. We try to try to help people with like charts and stuff. People who don't know who Talking Options is, she's Samantha from Miami.
From Miami.
Yes, and I guess she's an expert on option trading and how basically the whole idea was to bring these two worlds together and try to see that how we can hedge Forex trading against options. Or is that the correct term?
Yeah, that's the correct term. Actually, I'll introduce myself as well. Hey guys, as he mentioned, my name is Samantha from Talking Options. Roger reached out to me. Obviously, some of you guys have seen one of the videos that I've made, and that you're already saying, "Tis naughty girl, you talking about the man's industry and you're calling people out. How dare you?" Well, again, I came on here because, first of all, I'm a former ABC anchor here down in Miami. I studied my Series 7. That's how I learned about options trading. And then I started working with hedge funds and some private firms down here in Miami, which is when I started learning about seasonality and the ways in which institutional traders are hedging their risks with options and with future spreads. And so obviously this is a world of social media, and that's what'll catch your attention, is, you know, us talking about each other. However, the reason why I came on this stream is because I want everyone to stop over trading, and I have a solution for you, and I'm willing to share it.
No, I really appreciate it. No, it's very good. So, so you worked at ABC as a reporter first? Like, is that how you got into all this?
Well, no, that's not how I got into all of this. I've been trading since I was in college, but I'm the youngest reporter to ever be on TV. I've been on TV since I was 17 years old, and I just stopped maybe now about 5 months ago. I took a leave just to focus on what's been happening in the financial markets, period. But I also studied for my Series 7, and that's the way that I started learning about options trading. That was my first push into it. Before that, I was trading Forex. I've traded Forex before. And so I'm very familiar with the lingo in Forex, with the price analysis and all of that. But what I'm more familiar with is the fact that it doesn't change the fact that you are always stuck in a 50-50 market when you're trading Forex. So whether you're buying or you're selling, you have directional bias. And so institutional traders will talk about the fact of how do you hedge your directional bias? If you're wrong on the direction overall, how are you able to hedge your risk? And so one of the best ways to do that is by understanding how to trade spreads. And so you probably heard me say the word future spreads or option spreads. And with Forex specifically, what you're able to do with futures is you can still trade those same underlines that you have up here. You can still trade the Japanese yen, the British pound, but instead of you trading it outright, buying it outright, and then setting like a stop loss or something like that, instead what I trade is I don't use stop losses. All I need is I don't use stop losses. I know many people hear that, whoa, what in the philosophy? Yes, I do not use stop losses. I do not need stop losses. And when I show you guys the platform, you'll understand the reasons why.
So all this is done on the Thinkorswim platform?
All of this is through the Thinkorswim platform. Absolutely.
So I have a question for you because I used to trade options. So so you're saying you're not, so you open a position, correct? You open a buy and then you take a sell, correct?
So what you do with options trading is there's 4 different types of contracts. You have long calls, long puts, short calls, short puts. And so specifically with the long options, the reason why there's an inherent hedge inside that type of trade is because you always know your max loss before you even place the trade. So whether you're doing a long call saying that you think the Japanese yen is going to go up, or if you're doing a long put saying that you think that the Canadian dollar is going to trend down, you always know your max loss before you place the trade. That's something that if you're trading Forex, you don't know your max loss. You're just trying to set a stop loss to kind of, hedge your risk. But the problem is the stop loss isn't hedging your risk. The only thing your stop loss is actually doing, especially when you're looking at it from a day trading perspective, is many brokers are already cognizant of the fact that this is what day traders do. They set stop losses. So what do? They run through those stop losses, and then you keep going in the same direction. And what happens to you? You blow through account after account after account, and you're thinking it's because you're not setting your stop losses correctly. No, it's because if you trade based on spreads, you won't even need a stop loss. You won't even need to say, oh, after 20 or 30 pips, let me put a SL right here. Instead of you doing that, do a spread, buy and sell in the same underlying. And I can show you guys a live trade that I have right now with the British pound, where I bought and I sold in the same British pound.
Oh, really?
Okay, so Samantha, I see some people in the chat saying they're confused. So first of all, you said when you open a position, it tells you how much you're losing. We understand that, but it's the same as in the Forex market. If I take a position right now, I know where to put my stop and I know how much I'm risking exactly. So I know the risk amount that I'm taking.
See, but the difference is the fact that when you set a stop loss, when it goes through your stop loss, you're out of the trade. I have what is called a max loss. So say, for example, the position trends against me, right? Let's say that I got into the trade. You know what? It's better for me to just show it to you here.
Okay. Yeah, let me just set up in a way so you can share your screen.
Okay.
Let's see here. So stop sharing.
Is it on now? Should be.
No, not right now. I think on the top you'll see like a share button.
Okay.
Oh, something's happening. There we go.
You should be able to see that right there. Can you see it?
Yep.
Okay, perfect. All right, so this is a Thinkorswim platform right here, guys. This is what I use primarily to trade. Obviously, there's other platforms that also offer the options chain, but one of the main reasons why you'll see me using this platform is because, again, it has an options chain and I'm able to trade options with it. So let me just fix these candlesticks real quick and put this Hikanashi so we can make it look sexy. All right, perfect. So looking at the British pound /6B, you guys know this very well, but now we're separating the pairs, right? All right, so if we're looking at this pattern right here with the British pound, I have a trade and I'll set it up by pressing this trade tab. I have a trade right now in the British pound where I bought and I sold in that same underlying. You'll see it down here. You see this?
Mm-hmm.
Yes.
Okay, and this is a live account, by the way. So this is a trade that I have here where what it's saying is that I bought July. So you see the July contract, and when you're trading futures, you have different contracts that you can trade in the same underlying. What does that mean? Basically, I can look at all of these different contracts for the British pound and I can trade them. And you can see the expiration date that they have right here. So for example, the Z20 contract, which is the contract of the British pound that expires in December, you can see it says that it expires in 234 days. Wow. So what I'm doing is I'm buying and I'm selling in the same British pound. You see this right here? This is a buy. So I'm saying that it's gonna go up by July, and I'm saying that it's gonna go down by December. Now, why is this such a powerful trade? Because like I said, with this type of trade here, I am hedging my risk along the way. Now, this is a British pound. This is what the movement has happened in the British pound. Why is my front month the buy? Because my overall position in the British pound right now is a bullish perspective. And you can see here, I'm up 2,600 on these two contracts alone. Now on this one contract here, I'm trending down about 1,500. But again, you have to see that the fact of the days is different. This one expires in 234 days. This one expires in 52. That's the reason why I'm able to make some profit between that spread. Now, you asked me specifically about options. This has nothing to do, this is just future spreads. I can show you options, but options is gonna confuse a lot of people because it may take a little bit more to learn it. When you're looking at future spreads, you can understand this inherently. It's very simple. I bought and I sold in the same underlying. This is what you call an interdelivery spread. And so with this type of interdelivery spread, I don't need a stop loss. My risk is always hedged. Why? Because I bought in one and I sold in the other. And the difference between these two contracts is not only the days that you see here, but it's also the volatility in these two contracts that are different from each other.
So can these be traded? Let's say, so what we do here is we come on the chart, we take like 1 or 2 trades, and that's about it. And the way they're all logged based on, win and loss ratio. So that's like around, I'd say like 70%, something like that. But can this be done in the same speed, I'd say, or like with the same frequency as we do day trading?
So you'll probably hear me say that when you day trade, you overtrade. And the reason why is because I'm looking at a different time frame from you guys. When I look at these patterns here, I'm looking at a seasonal cycle, and I'll actually make these charts look even prettier for you.
Oh, this is the daily chart.
What'd you say?
This is a daily chart.
Yeah.
And also, can you do me a favor? Can you put the buy and the sell? Can you run a line between the buy and the sell? I just wanted to see something like, why is the reason why you took that position? So I saw that you took the buys at 1.2148, and then the sells at, I can't see because you're running because basically you're just averaging. You're putting the average between the buys and sells. So when your when prices run in either position. Hello?
I'm here.
So basically you're just averaging down, because when your buys, so right now your buys are positive, but your sells are negative.
Yeah.
So you're just basically taking the average, correct?
Well, that's not based on when I place the trade. Rather, it's based on what you call seasonal divergence. So when you're looking at these two different contracts, one of the main reasons why the further out you go in time. So for example, as I scroll through these different contracts up here with the British pound, you'll notice that as I go further out in time, what do you see with these, with the prices overall under the bid and the ask? They're going up, right? So usually what will happen is, like, for example, you'll have a contract like this that may be an outlier, but for the most part, when I scroll through these numbers here, you'll see that the less time, the more this number is going to be. And the reason why, specifically with the British pound, it's not with storage, but usually with any futures underlying, the reason why you will see the further out contract more money is because, again, you have more time here. You have more time to be correct. So it's not really based, I placed both of these trades at the same time. The reason why this one's at 0.25 and 0.48 may just have been because I pressed one before the other. It's really not based on the trade price. What it's based on is the time over here. So I picked this contract here based on the volatility that I was seeing specifically in these two contracts. So with the May contract, or the June contract rather, I have 52 days to be correct, but the main things that I'm looking at are rather the mark change between these two contracts, and again, the seasonal divergence. So when I show you like different futures underlines, because I don't only trade currencies, I trade God. I trade gold, oil, and dollars. So I trade the metal industry, I trade the energies, I trade the currencies as well. I know you
God.
like that.
Makes
I know
sense.
you like that. I trade God. I'll send you a t-shirt.
Gold, oil, and dollar. Yeah.
Gold, oil, and dollars.
So the reason I see here like May, June, July, and when you talk about like seasonal tendencies, is that based on like moon cycles, or what does it mean when you say seasonal tendencies?
Look at you ready to jump on into astrology.
Well, I've done my homework, I've done my homework. So.
Oh, I already know. Okay. Well, since you want to jump into astrology, I'll give you some astrology. We'll start off first with one of your big dogs. One of the names that you guys know very well. You know Ray Dalio, right?
Ray Dalio.
Yeah, we know Ray Dalio.
Ray Dalio. Okay.
You're breaking up.
Well, can you hear me now?
Yeah, you're good.
Yeah.
Okay. Well, I'm about to prove to you that millionaires don't believe in astrology, but billionaires do. And I'm happy you brought that up because I will use the example of what Ray Dalio did in November because of what he knew was going to happen in January 12th. So this is Ray Dalio right here. If you hadn't heard the news back in November, on November 22nd, you'll see here that he put $1.5 billion worth of long puts saying that the market was going to fall. Now, mind you, this was on what? November 20th. The market fell in March, but he had this November 22nd, and he said that what? The stock market around the world would fall by March. Now, the question is, how did he know this? There's another person who said the same thing. This was Bill Ackman.
I was about to bring
Bill
that up.
Ackman.
Yeah, I'm about to jump. Like, he sent the markets in a panic, though. What he did was a scam. I think so, personally.
Well, how was it a scam when it happened?
Because he had puts on the market already. Then he went on CNBC and spoke negative. Oh, the market's going to be going to turmoil because Corona. So that sent people in a panic, and they sold their position. So it sent the market in a panic.
But he knows very well. I mean, he done this in the past.
Well, Bill
he's always
Ackman,
doing. Yeah, he's always doing this.
Yeah, Bill Ackman is always going against the market. And we all know that.
That's what he does. Yeah.
But do you guys know why?
I don't know why he always goes against the market, but I don't know.
He always goes on TV and speak negative when he's holding puts.
Yeah, and on top of that too, these organizations or hedge funds have billions of dollars to hedge against the market, and their risk exposure is basically 0%. Basically, the average investor would not be able to hold those positions. This is the reason and why we have such a hard, I guess, diversity from the haves and the have-nots. Because if I was to hold puts on a short position for the Dow in November, I would have got wrecked come December when we had almost the highest.
I hear you.
Yeah.
I hear you. I hear what you're saying, but the point of the matter of what I'm trying to tell you is why did he know to do that before it happened? That's what I'm getting at. And when Raja brought up astrology, it's because, like you just said, they may have zero risk in the market. It's because all of these billionaires have astrologers. Every president that you've ever had has had an astrologer. Facts. Every billionaire, every president, all of them, they all have an astrologer. And there was
Who's Trump's astrologer?
Oh, well, I mean, most of the time it's actually their wife. It's usually their wife, but you wouldn't know that.
What?
Yes,
that's very controversial.
How do you know this information and we don't know any of this then?
How do I know it? I'm showing it to you right here. If you let me finish, I'll show you this right here and you'll understand it.
Let her speak so we can hear what she's going to say.
I want to know who Trump is because.
See, but here's the thing. You're going all over the place, but I'm still talking about Ray Dalio and Bill Ackman. So
let's let her finish.
Yeah, let her finish.
Let's learn the lesson with these two. Ray Dalio put long puts on the market November 22nd, correct? That's when he said that. Okay. Well, I'm going to show you the same thing that he was looking at. This is what he was looking at. Astrology. And not even only astrology, because I know a lot of people hear that word and they think about horoscopes. I'm not an astrologer and I'm not a regular astrologer. What I do is I study the actual chemical and alchemical makeup of these different planets. And specifically what you're seeing right here is Pluto and Saturn. So Pluto and Saturn for 2020, this happened at the beginning of this year. This happened on January 12th. Now, Pluto and Saturn, why is this a very important conjunction? Because the last time that Pluto and Saturn were conjunct, you see it here? This happened on January 12th of 2020. January 12th of 2020, Pluto and Saturn went conjunct. Now, why is this so important? The last time that Pluto and Saturn went conjunct, was in 1983. Do you guys remember what happened on 1983 during that year, 1982 to 1983?
2 years before I was born.
I wasn't born back then.
Yeah, no idea what happened.
It was also the largest recession. The
Oh,
market crashed in 1983. It was also the AIDS epidemic. What do we have now with Pluto and Saturn conjunct 2021 or 2020? We have what? The coronavirus pandemic. What I'm showing you is that the reason why there's truth behind astrology is because it shows you that when these planets align, let's say every 30 years, every 40 years, there's certain historical events that happen with these types of conjunctions. And so with Pluto and Saturn conjunct, 1983, what happened? The market crashed. We also had the AIDS epidemic. Well, what these billionaires know and what astrologers know is that they follow these cycles here to kind of see what could potentially happen in the future. And so fast forward now to 2020, when we had Pluto and Saturn conjunct on January 12th, what happened? Well, the next day, literally, look at this chart here. The next day, on January 13th, crude oil started to tank. Not only that, but just like Ray Dalio said was going to happen, what happened in March? All of the markets crashed. Why did they understand this? Because it's a cycle that they've already seen before. Astrologers understand that because they're looking at cycles. The reason why I talk about cycles so much is because everything moves on a cycle, whether it be futures that moves on seasonal cycles or whether it be people that move on what? Astrological cycles. So when I talk about astrology, I'm not saying that, we're looking at things like the moon, for example, is in Capricorn today, so I'm going to short the market. No, it's not that simple. What I'm doing is I'm looking at how humans are reacting in real time when these alignments happen. And so when Saturn and Pluto conjunct, what happens? Well, last time it happened, the markets crashed. Last time it happened, there was an AIDS epidemic. What do you see is happening right now in real time? Saturn and Pluto went conjunct for the first time in over 34 years. And what did you see that happen? The markets are crashing. Not only that, we have We have a pandemic on our hands. Again, what astrology does for you is it tells you cycles that consistently happen over and over when these alignments happen in real time. And this is what billionaires know. This is a part of their risk. Now, that's a part of how they hedge their risk. Now, that's not only it. Those are two billionaires that I mentioned, right? All right, well, let me show you the royal family. What did they do on January 12th? I kid you not. What did Meghan Markle and Prince Harry do on January 12th?
They came to Canada.
They left the family. They went to Canada. Raja, they went up to you, right? January 12th. They said deuces to the royal family. We out of here. Guess what? That happened on the same date that Pluto and Saturn went conjunct. Now, if I go into what Pluto and Saturn actually mean, I'll give you kind of I'll give you an overview. So when you're dealing with Saturn, whenever you want to learn these planets, again, I don't go with that foo-foo shit. I actually study what these planets mean.
That foo-foo shit.
So do you trade during retrograde?
What'd you say?
Do you trade during retrograde?
I do, and I will tell you that we're going to expect a lot of volatility going into this summertime because we're going to see Saturn in retrograde, Mars in retrograde, Mercury's going into retrograde, Jupiter's going into retrograde.
So do you use that to your advantage, or do you risk less because it's so unstable because the energy is so different?
I wouldn't say that I risk less. What I do is I'm looking at the changes in trend. I'm looking at what underlyings are going to be affected. So, for example, one that is definitely going to be affected with this retrograde is crude oil.
To change the trend? Is that what you wait for? You wait for retrograde for trend changes, and that's when you look at price action?
I look for large alignment. So it's not only retrograde, it's whenever you see these slow moving planets.
So last week when we had the three planets right next to each other in line with the moon, what were you doing with your trading then?
Well, I'll give you an example of what happened. When you're looking at what alignment are you talking about? So everyone knows.
I don't remember exactly, but I know last week we had I think it was Mars, Venus, and another planet that were eclipsing in front of the moon.
No, those aren't it wasn't Mars and Venus. Venus right now is in Taurus.
That's what I said. I don't remember exactly which ones it was, but there was three planets last week.
That Venus.
Yeah. I was looking at it with my telescope, literally.
Beautiful. Actually, what you would see yesterday is that we had the sun and moon that were conjunct.
Because look, I'm a firm believer in astrology, and actually many people make fun of me in it. You know, I wear my tiger's eye. You know about black onyx and stuff like that, right?
I do, absolutely.
But now my thing is, what I'm trying to find here is, what is the correlation between that and your analysis?
Absolutely. Well, what I will say is that the main thing that I'm looking for here, I actually have a book here that I want to show you. This book right here, I recently did a interview on my page. I don't know if you guys can see my camera. Can you see it?
Yes, it looks beautiful.
Yeah.
Okay. Do you see this book right here? Can you guys blow it up so they see it?
Mm-hmm.
We don't see the title. Can you read the title, please?
Okay, so the title says Trading in Sync with Commodities, and it's by Susan Abak-Goodell. She's a financial astrologer, and she explains in this book the relationship between all of these different, the futures market specifically, and astrology. And so what you will see is that it'll answer your question in a lot of detail, because what you will see is that all of these different underlyings, soybean, corn, wheat, they all started trading in the market on certain alignments. Like literally, you can go back to the chart of that specific day, and you'll see that some of these different products are actually tied to different planets. And what you will see happening these different planets. So to answer your question on what we've been seeing specifically in the last week, well, that would speak to what? The volatility that we've seen in crude oil. I can show you one. What'd you say? I didn't hear you.
You're cutting off a bit.
Am I cutting off? Can you hear me?
Yeah, your Wi-Fi is acting up.
So I have a question though, because you kind of strayed away from what I was asking. Like not about the book. Like I'm sure the book has lots of knowledge. I'm sure it's a great read. However, I'm trying to find, when you wake up Monday morning and you know that the markets are doing its things, what is the correlation between that and the stars and the planets?
One of the main correlations that you will see, you will have to study declinations. Now, I can get into that conversation with you, but just know that it's going to be a conversation between you and I. No one else is going to understand what I'm saying.
Yeah, that's true.
Well, we'll save that for another time. Then you can contact me after this. You can contact me afterwards.
Oh, absolutely, yeah. But one thing I will tell you, just to give you a little bit of a hint, is that you have to, in order to get detailed with this information, you have to start studying the declinations. And so you've probably never heard that word specifically with astrology. But what we're doing with declinations is now we're not just looking at the natal chart and what happens on a longitudinal aspect. Now you're making it a third dimensional picture, because now you're looking at the latitude.
Not to cut you off, and I apologize, but that's where I find it really confusing, because see, me as a Forex trader, and I trade stocks as well.
Yeah.
It's easier to just look at a chart and keep your discipline and keep your energy clean and just hit the morning with a nice breakfast, make sure your vibes are good, and just stare at your time frames and do your charts like we do here every morning. But that's why I'm trying to figure out the significance of what do you mean about the astrology and how it ties in, because yeah, okay, during retrograde, yeah, we have times where we feel down, and you know what? Mentally, if you feel down, maybe you shouldn't trade, but that's common sense. If you're not having a good day, you shouldn't trade any markets. Don't you agree?
And then we know gas prices tend to rise in the summertime, right?
Yeah.
Right. This doesn't have to do with how I feel. This is more to do with how the markets are reacting and how people are reacting to these alignments. So I'm not looking at, Mercury retrograde and saying, oh, snap, Samantha's going to have a bad day. She shouldn't trade. No, what I'm looking at is what is Mercury affecting? Which products could it potentially be tied to based on, again, when I look back at the Mercury, when I look at the natal chart of these different underlines, how does it relate to these planets? So if I'm looking at Mercury retrograde, for example, I may want to look at the stock indices, because those are some that are going to be affected by Mercury, because Mercury rules the stock indices. Another example, for example, is Pallas. So Pallas is an asteroid that you'll hear of in astrology. Well, Pallas is also tied to palladium. And if you look at the charts of the last 2 weeks, you'll see that palladium had a huge rally. It rallied from a -2 when I show it to you here. It rallied from a -2 back up towards the mean. And when you hear me say the -2 and the mean, it's because I'm looking at these levels right here that you see on the chart. So you see this rally that happened right here? Well, this happened when Jupiter was conjunct Pallas in the sky, and Pallas is ruled over Palladium. Now, looking at Palladium here, you can see the obvious relationship right here. I'm telling you that when these alignments happen, because they're slow-moving alignments, it can exactly affect not only the metals that are traded in the industry, but the overall industry as well.
But see, this is the thing I have an issue with. If we go according to astrology, the sun is what represents gold. So how does the sun or gold markets move according to the planets? Because like, you know, Mercury, Mars, how do these affect? That's what I'm trying to find the correlation here.
So the metals, it's by understanding the metals. You're absolutely correct. Because you have sun tied to gold, you have to understand the way that gold moves based on the alignments that you're seeing right here as well. So we can even go back to /GC. As I mentioned, we're gonna probably lose a couple of people. If you go back to gold, you will see that there were certain alignments that were happening. Like, let me bring this up here. I think it's lagging a bit.
Yeah,
okay, this is a 180 space.
I'm sorry, I don't mean to
Can you
cut
see
you
this?
off. I don't mean to get. Oh yeah, you lacked the lag, so I wanted to hear what you were saying before that.
Okay.
Yeah.
No problem. So I'm looking at gold right now, right? And this is a 180 space time. So I'm looking at the last 180 days and I'm looking at 4-hour candlesticks. So you can see that prices rallied from a +1 almost up towards the +2. Right now it's around 1758. Well, what I'm telling you is that in real time, what I do with astrology is I'm looking at these charts here and I'm looking for key conjunctions that are happening on a longitudinal aspect, but then I'm also looking at the declination right here. Now, again, I'm not sure if you're familiar with even what is the declination, so I don't want to lose people too much.
No,
but,
I'm not.
So
okay.
I have a question. I
Don't
kind of want
worry
to.
about it. Some people are familiar with it, and some people aren't. Let's hear it all.
I kind of want to steer the conversation to more of a trading side here. Now I'm sure. Yeah. So I'm sure like a lot of people know that oil is low, and everyone seems like oil's going to go up. So I kind of want to understand based off the options, because like there were some people who tried trading oil. They took all buys on Forex, but they got hit with swap fees because the fee to trade oil is really, really high. When it comes to options and futures, how can you capitalize on oil, which is bound to go back up?
Okay, so there's two ways. Now, many people will not be able to trade the full contract for crude oil because they require too much buying power for them, but they also do have the micro contract. But if you were saying, for example, that you wanted to trade crude oil, and you wanted to either do a futures spread or an option spread, those are two different trades. So if I was doing a futures spread in crude oil, one, selling a back month, because I'm saying that I believe that crude oil is going to go up in a shorter amount of time than it's going to go down. Now, the reason why I'm looking at these levels right here is because it's showing me how far price has deviated away from what is normal. You mentioned that you guys are mostly day traders. Okay, what I do is swing trading. So I'm looking at a perspective where I may stay in that trade for 2 to 3 weeks. Why am I doing that? Less stress. I don't have to look at these charts every single day. I'm looking at what's happening over a period of time over the last 30 days, and then I'm judging it based on these deviation levels. So if I go over to the trade tab right here, 2 different types of trades that you can do. The first one is, again, like I mentioned, I could simply buy the front month and sell the back month. Now, it's not just simple as just buying and selling. As I said before, you have to understand the volatility difference, and then also why are these different contracts moving in the way that they're moving here, where it says 17, 22, 24. This is what you call contango in the market. This is when the market is moving where the further out you are, the more money it's going to cost. Now, one of the main reasons that happens is, again, going back to seasonal divergence. It's the fact that crude oil has to be stored somewhere. So being that it has to be stored, these contracts as you go out are going to cost more money. Now, you heard about the crude oil industry tanking, right? Going down to -40. Well, to actually put some truth to it, it wasn't every contract. Actually, you can see that most of these contracts didn't really vary that much. It was only the May contract that went down to -40. I'll see if I can pull it up here. It was /CLK20.
There it is, right?
Why are spreads so important? Okay, yeah, it's right there. Why are spreads so important? Because if you were in a trade like this, for example, and this was going against you, again, you would have had another leg that would have been able to offset some of that risk. So you see this contract here went from 17 to -40. This is a contract they were talking about. Literally, people lost billions of dollars trading this, especially if they were trading it naked. But those who understand how to use spreads, oh, they made a lot of money. Because even if you had, for example, buy on this side, well, you probably had a sell on another contract month, which would have hedged your risk to some extent. So instead of you doing a naked trade where you're just placing one trade in one contract, again, what you want to do is you want to do something like a future spread or an option spread. So looking at crude oil, you press this trade tab here.
So if you were to
the futures top of break. Yeah.
If you were to choose, let's say, a hedge with this oil trade, what would you have chosen as the hedge trade?
I didn't hear you. Can you repeat that?
If, let's say, if you were to choose another contract for this oil trade, what would you have placed as your second or hedge trade?
So
I'm assuming a buy and a sell?
Yeah, so that's pretty much what she's saying, right? She's putting a buy and a sell on two different, on oil and then a different option.
Yeah. Correct, because if the buy is on top, that means she's going long term, and if the sell is on top, she's going short term. So
yeah, and then when the market comes back, you get a spread, which makes sense, right?
Yeah, it's basically like if we were to buy and sell gold right before, and then when gold shoots up, you take your profits on buy, and when you wait for it to go back sell, she starts adding sells again. That's all it is, bro.
Go ahead, Samantha.
Sorry.
When you're looking at the spread, for example, I'll give you an example of a trade that I would do right now in present time. So because of seasonal divergence, it's not as simple as you just picking a contract that has less days. You actually have to look at the charts for these different spreads. So I'm actually working on an indicator right now that will show you these spreads in real time. So it'll show you how the crude oil, for example, M20 and Z20 contract has acted over the last 15 years, where it is compared to the 15-year cycle to the cycle that you're seeing right now. But let me give you an example of a spread that I would do right now. So what I would do is I would buy August. So this is August 20 right here. I would buy this contract right here. And I would sell the May contract for 2020. And by buying this one, now you may be thinking, wait, you're buying the January and you're selling, wait, the May is actually going to be the 2021.
Oh, I think.
We lost
Samantha, your Wi-Fi is acting up.
Oh, no, it wasn't the Wi-Fi. It's not the Wi-Fi.
Yeah. You're back on now.
Yeah, you're
good. Oh boy.
Yeah.
Oh, okay. All right. Let me go back to that then. So what I was saying is that this is one that I've done in the past, is that I did a May contract against August. But what I would do with this specific one is I would do December and the August contract.
I think she muted herself.
All right, so what I would do in this case is I would buy December and I would sell August. So by buying the December contract, I'm looking at the /CLZ20. So let me scroll down to that one.
And these don't have any theta decays or anything like that, correct?
Exactly.
Okay.
Exactly. So that's one of the key benefits to trading future spreads over option spreads, is the fact that you do not have time decay. So if this position were to potentially, let's say, for example, I need to run it back a little bit, if I need to roll it a bit, what I can do is I can roll this position and it's not going to affect me as far as the amount of money that I'm making, because there's no time decay to it. But again, what I would be doing in this case is I would be buying this December contract here. I'd be buying this one here, and I'll add the sell as well. I'd be selling the August 2020 contract. So that one's going to be a little bit above it. Gonna be this one right here.
So basically, if you think that price is gonna go up, you're buying it for the long run, which is like December, and to hedge it, you're hedging it for the short term.
Exactly.
Okay.
Exactly.
Okay, now I
Right.
kind of get it.
Yeah, it makes more sense now.
I have a question for you, Samantha, regarding you taking the buy and the sell for obviously contango, because yeah. So what happens in a situation like now, where we have a lot of these oil traders who trades for speculative purposes? They don't, 97% of the time, they don't anticipate actually taking physical delivery. So now we have market phenomenon such as Saudi Arabia and Russia, who are continually producing more oil, and it's filling up the storage. So for the US oil market, oil is stored in Cushing, Oklahoma. And because these oil companies have been overproducing oil, and not many companies overseas are buying American oil, these people that are taking, that now have to take delivery of the oil because they have to settle their futures contracts earlier, obviously resulting in a decline in oil prices. How do you trade that?
So let me understand the last part of your question. I missed that last part.
Yeah, so these people that trade speculative oil future contracts, they're having to take delivery of their oil, physical delivery, but because there's an oversupply of market forces around the world and nobody's buying American oil, where the oil is stored in Cushing, Oklahoma, which is where US oil contracts are settled, there's no place for them to take physical delivery of the oil, which is resulted in the negative prices that we've seen.
Yes.
Yeah. So how do you trade that then without being able to understand without being able to take into consideration, obviously, that this is it's an unheard of phenomenon?
Well, what I would say is that what we're doing is, as you mentioned, speculative traders, is we're not looking for physical delivery. So you can easily close these contracts before the expiration date to even worry about that. But you are right as to why did they say the May contract tanked and went down to -40? It was because, again, no one wanted to take physical delivery, and Cushing, Oklahoma was already at maximum capacity. So what I would do is, again, I'm trading these future spreads for the reason that I want to always hedge my risk. So if one contract gets a lot more volatility than the other, going back to the word seasonal divergence, what that means is that you will see in the market that these different contracts, they are affected differently. So one could potentially stop moving while the other continues to run. That's why you want to look at the charts that show you the overall trend of these spreads over a period of time and the 15-year relation or the 5-year relation to what it's doing. So if you're a speculative trader and you're trading crude oil, again, to avoid what's happening with physical delivery, you simply have to close your contracts at least 2 to 3 days before that, and you wouldn't have to worry about that, because what we're trading based on is just a speculation. It's not for the actual delivery.
The point I was trying to get across is that these guys that were forced to take physical delivery never wanted to take physical delivery, and because they didn't have the capacity to store the oil that they had to take physical delivery of, that's why the price of oil contracts would decrease, because they had to settle them early and they had to settle them at a loss. Because usually when people have to take physical delivery, it's through ERPF, right? So it's like exchange for physical, but they take cash. But these people who had to settle their contracts earlier, they've had to take a loss, basically, you know. But you know what you're saying, I totally get what you're saying. I just wanted to clarify.
Absolutely. Yeah, I would say that the main thing is that we won't have to worry about that physical delivery if you close your contracts ahead of time. I even had a contract in that K20, and I can tell you up front, I lost $10,000 in one day because of that contract. But I'm happy I got out, because as you can see, most people blew through their account just from that one contract if they had it and they didn't have a spread. Now, the only reason I was down $10,000 on that one contract is because I had already closed the other side of my contract, because I sold and I bought 2 different contracts. I had already sold that one and closed it for profit. So this was one that I was allowing to run to see if I could make back some of that money on this side. And again, you saw what happened. I closed that contract on Friday, and as you saw, the market on Monday is when it tanked. Now, the reason why I got it out of that contract is because over the weekend, during that same time, there was a lot of volatility, and it went from, I want to say 17 to 14 in the space of like 2 hours. And so since I had already had my insurance off, I said, well, you know what, let me just close the overall position. And then if anything, I'll enter a new position like I did just now, where I'll sell a new front month and buy another back month.
But then what happens? You said that these trades that you've been taking have been based on contango, meaning that obviously because oil futures contracts are priced 72 months into the future. So that gives oil companies and investors the ability to see what the future oil prices are. So what happens if the oil prices go from contango into backwardation, meaning that the oil prices actually drop? And then secondary to add into that, there's just been a news release relating that the people who own the US oil futures have put out a statement that says that they can, the software basically failed and that allowed the prices to go negative, and then they can choose to liquidate their prices to negative if the price drops below $8 a barrel, meaning that if they expect that people don't want to take physical delivery, they can basically manipulate the prices. How do you equate that into astrology or into the tarots or into anything else that you're using, please?
Well, going back to what you're saying with crude oil specifically, I would say that there's a very obvious relationship between what has been happening in the last few months with Saturn and Saturn specifically with the oil industry. So like I mentioned, this was a high right around Pluto and Saturn. When Pluto and Saturn went conjunct on January 12th, we hit this high of, look at this number, by the way. I don't know if I have any numerologists out there, but this says 6565. Hit a high of 6565, and you see what that low says? 6.5. Again, this is not a game. You're looking at this for yourself. And this is just talking about numerology here. But going back to astrology, this is a high that we hit. Pluto and Saturn went conjunct, never been the same since then. Well, you see this this rally that we've had right around the beginning of April. You see where prices went from 20 up to 28. Well, when this happened, we actually had Mars that went conjunct with Saturn. So Saturn is a very slow moving planet. It takes a long time for it to go through the different constellation signs. But when you're looking at something like Mars, every 2-3 days, it's moving a degree. And so that fast moving planet will catch up with these slow moving planets, and you will see the effect on a week to week or a day to day. So specifically with crude oil, the two planets that I've been definitely watching out closely for is what's happening with Pluto and what's happening with Saturn. This rally that we had here, literally to date, Mars went conjunct with Saturn, and this is what you saw. It was like a sudden adrenaline, basically, that just pushed into the market to where it went from 20 to 26. Now, like I was talking with the previous gentleman, you have to understand not only the planets, but then also the declinations. True astrologers do not only look at what's happening with these planets here, but they look at the declinations of these different planets. And what the declination is now, instead of you looking at things on a flat surface, we're giving the entire perspective, we're giving it now a 360. I'll ask you a quick question so you can understand what I'm saying. How many directions are there?
2.
It depends on your narrative.
2. Up, down.
How many do you think there are?
Exponential.
Well, it could be infinity, because you can move around in a small space and you could be in any direction.
3.
Someone said 3. Why?
Up, down range.
Up,
sideways.
down range, yeah. Sideways.
Yeah.
Yeah, 3 makes sense. Like a 3-dimensional, I would guess.
Up, down, forwards, backwards, sideways, side left.
It's just up,
It's the
down,
same, it's just a different name. It's up, down, and sideways.
Okay, so typically people,
market
most people
movements
would
or what
answer
in
that
general?
question and they would say 4. Most people would say north, south, east, and west. What I'm trying to get at is there's actually 6. So there's
got top and bottom as well.
west, and then there's up and down.
Yep, exactly.
And that's how you're making a 3-dimensional. Now you're looking at things from a 3-dimensional standpoint. Since you mentioned that, I know I don't want to get off topic too much, but this is really interesting to me. And I want to show you guys stellarium, because I know that you're probably seeing on the charts right there that I have 13 constellations and not 12. And it's because there's not 12 constellations that the sun goes through the ecliptic. There's actually 13.
So,
And the 13th one is called Ophiuchus.
so quick question. So those lines we saw on the chart, those are constellation lines?
No. These, no.
Oh, okay.
Those are indicators.
Yeah, okay. Okay, my bad. my bad, yeah.
These are not constellation lines. You guys are funny. No,
Okay.
these are standard deviation lines.
Okay,
And
got
so
it.
what this is telling me is what is the norm trend for crude oil and where is the trend right now? Where are prices right now in relation to what is considered normal? So I'm a Libra. This right here is called the balance beam. And we're always trying to look for balance. And so as you can see here, with crude oil specifically, it trends between the positive on one and the negative one 68% of the time. This is where price likes to be. So what these deviation levels are telling me is it's informing me on how far we are away from what is considered normal.
Okay. Thank you.
So according to this big time buy on oil at the moment till 34.71, right?
What'd you say?
According to this big time buy, go long on oil until 34.71.
I would say definitely. There's definitely some movement to the upside that could happen from crude oil. And as you can see, just from looking at this chart, you guys are pretty intelligent. You can see the fact that it's obeying some of these levels. And when you look at we don't even only have to look at crude oil. I can also pull up corn here. And you'll see that every underlying, there is some sort of relationship between these underlyings and what you're seeing with these deviation levels. And over time, because I'm looking at seasonal cycles as well, what you will see is that there's a seasonal cycle with these underlyings. For example, let me show you the seasonal cycle of corn. So this
Can
right
you
here
tell
is
us what's the indicator that you're using right now? So also,
Yeah,
what's the name of that indicator?
I'm looking at deviation levels.
Okay.
So this is a seasonal cycle. This is a seasonal chart of corn. What is this telling me? This red line is telling me what is let me make it look pretty for you. Let me add the seasons on there. Okay, cool. So what this is gonna tell me is what is the seasonal trend of corn in the last 180, for example, since I'm looking at 180. It's gonna tell me what typically happens during springtime. This is the last 5 years compiled together compared to what is happening right now. Now, one of the main reasons why corn slid the way it did is because 40% of it is used for ethanol and no one is going anywhere, right? You've been in lockdown, everyone's been on lockdown. So for that reason, prices have slid down to, as you can see, 385 all the way down to the lower 300s. But what you're seeing though on a seasonal perspective is what? Even though prices have slid lower going into this time period, it seems like the seasonal cycle is telling you what? We typically hit a low in corn during this cycle anyways. During springtime, we typically hit a low in April going into May. So this is the reason why I'm looking at seasonal cycles as well, because it's going to tell me where we typically hit seasonal highs, where we typically hit seasonal lows. Now, one of the main reasons why this is important is because this is based on supply and demand. Whenever you're trading the agricultural products, especially, they move heavily based on supply and demand. Yes, there's going to be geopolitical news that affects it, but not nearly as much as it affects British pound, as it affects the Japanese yen. But when you're looking at an underlying like this, like corn, this moves heavily on supply and demand. So I can look at these seasonal cycles, and again, there were seasonal highs, like right here, or seasonal lows.
So how do you trade gold?
What? What was that?
He said, how do you trade gold?
Are you
We will ignore
Jesus from the
consideration
heavens. That was Jesus from the
taking
heavens.
in Samantha?
Yeah.
Are you taking into consideration when the market moves? Are you looking at? Are you attributing the fundamental movements, the fundamental undercurrent of any financial market or any instrument that you look at? Are you attributing that to supply and demand based on economic and socio-political things, or are you attributing that to astrology and numerology? Because you've said not to say that you're wrong in what you say. I'm not saying that, But what I'm saying is there's two discrepancies that you've made. On one hand, you're saying that when you make your trades, it's based on astrology and tarot cards and solstice and equinox. I understand that.
We're going too far. No, first of all, I never said the word tarot cards.
You had the tarot. Sorry, you had the screen was a tarot. Sorry, maybe I'm wrong.
Yeah, no. Let me clarify for you. So what I'm saying is that I'm not trading based on astrology. What I'm basically doing is I'm stack bundling conviction. You have to be a systematic thinker in order to really manifest wealth. What do I mean by that? It's by being able to look at different things and find the similarities in it. So what I'm doing is I'm stack bundling different fundamental analysis that I use on a daily. I still look at the fundamental news. I still look at the economic data that's coming out. I still look at the WASD report, the USDA report, but at the same time, I'm stack bundling all of these different analysis that I'm coming across. So I'm looking at the fundamentals. Then what do I do? Well, I look at the deviation levels. Then what do I do? Well, I'm looking at the seasonal cycles. Does corn have a seasonal cycle? Okay, well, let me stack bundle that into my conviction. Then I'll even run to astrology. Let me also look at the astrological cycles and stack bundle that in there as well. So I'm not saying that I'm trading just based on astrology. No, what I'm saying is that I'm stack bundling all of these different areas that may have some sort of correlation to, for example, the corn market or the soybean market, and I'm putting that all together into one to really find out what is my direction, what is my overall directional feeling that's happening on what's happening in the market in present time. So it's not simply astrology. What astrology is doing is just giving me a systematic way to understand what is going to happen on a day-to-day basis. Now, when I go back to talking about astrology again, I have to mention metallurgy, because metallurgy ties to what someone said earlier, which is how do the metals relate to these different planets. So for example, you'll have Venus that is tied to copper. You'll have palladium that is tied to Pallas. So these are different underlines that you also see the effects in the market.
What about gold? Because a lot of us in here trade gold. So let me ask you a question. Let's say Monday morning you wake up. What is your trading plan? What chart do you look at first? Or do you check out your astrology path first? Or do you open up Bloomberg and check the fundamentals of what's going on around the world? Or
the question is, how many trades do you place on a week or a month? Because
yes, exactly.
she's a swing trader, first of all, so she's
right.
probably
So
not trading every day.
Yeah. So that's my thing. So like Monday morning, do you look at the charts and then say, okay, I'm gonna look for price on Tuesday for corn or natural gas, and I'm gonna do this, and then do you do all that off of your technicals or the fundamentals? Because there's many factors.
It's a mixture. So for example, when I'm looking at corn right here, if you see that it's at a -1, right? Let's say, for example, today is Monday and I'm looking at this for the first time. Okay, well, the first thing that I'm looking at is I'm looking at what is the trend telling me here? I'm looking at the technicals, my deviation levels, and where is the market? After I'm looking at this, then I'm running to the fundamentals. What has happened in corn recently that has affected the supply and the demand numbers? After I understand that, then I want to see, okay, well, what contract am I looking at that I'll be probably looking at to place this overall spread? You can see that I already have.
Not to cut you off, but so when you're at that point of your process, your mentality's thinking about that. At that point, that's when you look and say, okay, well, I think corn may rise to these prices within the next 3 months, so I'm gonna buy a 90-day contract, or 6 months, so I'm gonna buy a 180-day contract.
I'm not trading it based on that long of a period of time. So I may get.
I'm just giving an example. So 30 days, 20 days, small contracts.
Yeah, I may stay in for 2 to 3 weeks, but I'm looking at something that's happening over a period of time. What you will see is that these time frames that I show are very different from the ones that you guys are looking at here.
You don't know what I look at, sorry. So I'm sorry.
No. I know what you guys look at because I've been watching some of your streams. So that's why I'm saying that. I've watched some of your streams before. I see that many of you look at the 15-minute chart, the 30-minute chart. So that's what I'm basing my information on right now.
Yes.
So please show us, what do you look into when you trade the gold?
That's what I'm saying, because like to you, what it sounds like, if I were to use your plan, I would just use, like, if I was in your shoes from what I've learned from you this morning, I would look at how Right now, we're going to have another change in the phases because of astrology. We're going to have a new stage changing soon. I'm going to look at common sense of the fundamentals in the economy. So I look at gold as a good price to buy. So like in an options comparison to Forex, it'd be like me saying, okay, I think gold's going to hit 1750 in the next 20 days. So I'm going to buy gold right now with no stop loss. And then as it goes against me, I'm going to buy more gold with no stop loss.
That's not what
if it goes against me, and if it goes against me, I'm gonna add sells to hedge myself until I feel it's gonna turn back around and go back up, and then I'm gonna close my sells and add more buys up until my contract expiration, which I believe will be the price of 1750.
So the key thing that you've already said so far that doesn't match my trading plan is I'm not scaling in like you're saying. When I place these spreads, I place them at the same time. So it's earlier today, next week I'm gonna sell.
Interesting, because earlier when you were explaining to Kevon, you were saying how you were sizing yourself in.
No, that's not what I said. What I said is I'm buying and I'm selling in the same underlying. I'm doing a spread at the same time. The spread that he mentioned is with the British pound, right? And so when I showed you here, place this trade, let me finish. When I placed this trade, when I did the June and the December, I did this at the same time. I'm not saying that I did the buy first and then I added the sell for a hedge. No, I'm telling you, I placed both of these positions at the same time. And the reason why I was able to do it is because there is seasonal divergence that happens between these two contracts. So I'm not saying that I placed a buy and then it started going against me, so I placed a sell. No, when you're doing spreads, I can place this at the same time and see the same movement that you're seeing here, again, based on seasonal divergence. Now, there's two different types of trades that you can do. Since you mentioned gold, I'm going to talk about it. British pound here, the trade that I did here, this is called an interdelivery spread. I bought and I sold in the same underlying, British pound. Now, an intercommodity spread is when I'm trading the relationship of two different commodities against each other. So, for example, you mentioned gold. I just sent out a trade to some of my members with gold and platinum because there's a seasonal divergent relationship between the way that gold moves and platinum during this time. So how do you do an intercommodity spread based on seasonality? Okay, one of the first things that I'm doing, first of all, is I'm looking at these charts. What are the charts telling me based on what is considered normal? What is the normal trend of gold looking at a year perspective? Okay, now I'm not trading it just to stay in for a whole year, but the reason why I'm looking at this year space time is because it's gonna show me how quickly does gold go from a positive one back to the mean, or how quickly does it go from the negative one back to the mean. That's the reason why I'm looking at this space time. Now to trade these two in relation to each other, again, I'm looking at seasonal divergence. So trading the relationship of platinum against gold, I'll actually tell you when we sent out this trade. I sent out this trade in the beginning of April, and you can see that gold right now is what? It's at a positive one. It's at 17.88. Well, at the same time, platinum was at what? In the beginning of April, it was already trending up, but it was right here at 700. And so what we did was we did a buy on platinum and a sell on gold at the same time. Now, it's not only these charts that I'm showing you here. The other charts that I'm looking at are the ones that combine it together as a spread. I keep talking about trading it as a spread. So I'm not trading these and putting these two positions in at a different time period. I'm trading them together because I'm trading the relationship of the two. So when you're looking at gold and platinum, when you look on a seasonal perspective, they have a seasonal relationship where one will trend up as the other trends down. What I'm doing is I'm catching that period of time where I can make profit on both of these.
Nice.
Right. So there's obviously like a lot of information involved here. So what's like the best place where people can get in touch with you?
Well, the way that they can get in touch with me is talking options, but I'll say this. You guys are pretty cool. I don't mind running it back. I don't mind sharing this information multiple times so that you guys can really get it. Because as I said, if you are day trading right now with Forex, this is nothing against anyone on this line right now. I'll speak to your viewers. Any viewers out there, I got $5,000 for you if you can show me 4 back-to-back profitable quarters in the market trading Forex. I got $5,000 for you.
Roger.
Yeah.
Would you mind if I just asked her a quick question?
Yeah, for sure.
Can I ask later? Sorry.
First off, I appreciate you coming on. Because as a Forex trader, I find it hard to find people who know about options. Looking at oil right now, for me personally, I think in the longer term, it's going to come up. Trading it with Forex and through my brokers isn't an option because you get sort of wiped out with spreads and, excuse me, the profits you make are negated in that sense because of the spreads. How can we, using options or futures, sort of buy oil now so that when it comes back up, we can sort of make our profits?
I'm sorry. I kind of missed the last part of what you said. Just the last part. You said to make profits on what?
Oil.
So trading oil in Forex right now is just too expensive. Is there a way with futures and options where we can trade oil now, say it, I don't know, you buy a contract for, I don't know how it works, $17 or $20 or whatever, because my aim is that, what I think is that in 8 months, oil price is going to come back up. So how can we sort of capitalize on that using futures and options?
It's more expensive than options. I mean futures, but options possibly.
Options is definitely possible.
That's the question, either or.
What you can do with either or, so let's say, for example, futures is too expensive right now. Well, what you can do is you can easily use the options chain. And so I'll talk about some of the trades that you can do with the options chain. So this is a future spread that I have down here. Now, you'll see that it says BP effect right here. This is saying that this is the amount of money that I had to use to actually place this trade. So that's my buying power effect. And so like you mentioned, crude oil is a little bit more expensive to trade when you're talking about futures outright. Now, another thing that you can do, because it's still expensive for options, but what you will have the opportunity to do is either out of the money calls, if you want to do something out of the money, or you can also do something where you are choosing a long call, long put that is at the money. Now, typically what I do whenever I'm placing these trades, I'll tell you right now, the main thing that I'm doing is I'm adding delta. So you've heard of these different Greeks right here. Let me add delta to the table because delta is telling you the directional bias. Now, these numbers here are a little bit wacky. So let me make sure I have the right crude oil up. Because that bid-ask spread looks super wide. You know what? The reason why crude oil right now looks the way that it is because they're not allowing you to do any buy contracts. They're only allowing you to close. I don't know if you guys heard about that, but in specific months, they're not allowing you to open any positions. So right now it's still closed because it's not going to allow me to enter any in this one. But what I can show you, I can show you the same trade with natural gas or a similar trade with natural gas. So let me pull up that one, /NG.
Wait, thank you.
Okay.
All right. I think Janena had a question here too.
Yeah, can you hear me?
Yeah, I can hear you.
Hello, good morning, Samantha. Thank you for being here with us. I have two questions. And you talked about seasonal divergence and how it can apply to corn too, I believe. So do you consider off-season crops, rotation crops that are necessary every 2 to 3 years, at least here in Brazil, for soil correction? And can you spot this divergence on charts? This is the first question. And the second one, you talked about the Greeks, the delta, and here in Brazil, it's so common, we wait for better prices, stocking over in the grain silos. So we do it all the time, waiting for a better price. So can we spot it? Because doing this, we are messing with the delta, the time passage on the options, and the other Greeks in the Black and Scholes model. And so these are the two questions. If we can spot this divergence of seasonal crops on chart, and how we can block this messing on delta as we do waiting for better prices. And also with the astrology, I see at the moon cycles that are essential to agriculture. Thank you so much.
No problem. I'm trying to I missed the first part of your first question, but I see it was about seasonal divergence. So I'll speak on that. When you're trading seasonal divergence overall, you mentioned that you're looking at different crops or different agricultural products. One key thing that you can do with seasonal divergence, like I mentioned with gold and with platinum, is you can trade the relationship, the divergence away from these two trends. So for example, let me see if I can pull up, I'm going to stop sharing for like a brief moment, and then I'm going to pull up an indicator so you guys can see what I'm showing you. But while I'm pulling this up, the main thing about these spreads is the fact that you will not blow through your account, guys. That's the main thing that I'm trying to show you. If you place these spreads, you always have a hedged position. I did not need to do a stop loss on crude oil. Why? Because as you can see, I sold the front month, I bought the back month. What do I need a stop loss for? I'm allowing this position to basically come to fruition in the next 2 weeks. So I won't need to use a stop loss in this case. Instead, I'll just allow, again, seasonal divergence to take place here, where one contract may need a little bit more to catch up with the other. Now, the second question that you asked was about the delta. The way that I use the delta specifically, when I'm even looking at natural gas in this case, is I typically like to find something that is higher than at the money. I usually try to catch something that's in the money. Why? Because this is going to show me, this is telling me that 63 or 67% of the time, price is going to move in this area. It's giving me a slightly higher probability. So the way that I would tell you to use delta is, again, to look at things from what can I get that gives me a slightly higher edge than 50-50. In this case, if I look at a delta right around the 60 range, you can see what right off the rip. It definitely is going to cost me more. But again, at the same time, I don't mind paying a few more dollars if this means that I'm going to have what? I'm going to have a higher probability. Now, it's not only about the delta, though. The next key thing that you have to look at is, are you picking a high probability expiration? What is a high probability expiration? It's by looking at this chart over here, especially if I look at the deviation levels and judging it and saying, well, how much time does it take for my actual trade to come to fruition? If I'm saying that natural gas is going to go from a -1 to the mean, how long is it going to take for that to actually happen? And so what I do is I look at the charts again, and then I run back over here to the trade tab, and I'm looking for, okay, well, if it's going to take about 30 days, well, then let me give myself a little bit of extra cushion. Maybe I can take the 32-day, or maybe I'll go out to the next one. Now, one thing that you'll note right off the rip is that as you go further out in time, what does that mean? That's also going to mean that you are going to pay more for the contract. But here's the thing, even though you pay more for the contract, I placed many trades where I may have done an 80-day expiration and not held it until that time. And guess what? I still made money on it. So it's not going to affect you as far as the money you make once there's volatility. So you always want to make sure that you're giving yourself enough time. Now, there's two different strategies that I'll use when I'm trading options. When I'm trading options and I'm going long and I'm just using a long option to place my trade, I'm usually going to try to find something that gives me more time. But when I'm doing something like weekly spreads, which is credit spreads, whether it be a bull put spread or a bear call spread, well, if you know anything about those two, what are you doing? You are doing a credit spread where you are collecting more premium than you are paying. And so in that case, I want to have probably less time. Why? Because if it expires in 3 days and I place a position in this 3-day contract and I say that natural gas is going to, in this case, stay, it's going to stay below 1.17. Well, guess what? I got 3 days to be correct. So that is how I use short spreads or vertical spreads that I do. I want quick time because I'm borrowing credit. I'm collecting money from TD Ameritrade in this case. And so because of that, I may use what you consider a lower delta, but it's going to be a higher probability for the short options when I'm doing those spreads. That was kind of to answer the first two questions on what I got as far as seasonal divergence. And then also, I have this spread on here. This is a spread actually that I put on yesterday. Can you hear me?
Yep.
Okay.
There's a baby talking.
And as you can see, this is a what? It's a sell and a buy. Now, mind you, this one is up 510, this one's down 350. Now, the overall position is saying what? I sold in January 2021, and I bought in April 2021. Now you may be thinking, wait, why do you have a sell though as your front month? Again, I gotta go back to seasonal divergence. The way that these contracts move, the April contract here for 2021 can have a slightly different seasonal trend than this 2021 contract for January. So again, what I have to do is I have to look at these two charts separately on the indicator that I was kind of mentioning to you guys, and seeing how it relates to its 5-year trend and its 15-year trend. The chart that I'm telling you about, I can't show to you yet on Thinkorswim because I'd have to like log out and then log back in, but it's very similar to what you saw when I showed you the crude oil cycle, and you saw that seasonal cycle at the top, the red line, and then you saw that blue line. Okay, the chart that I'm telling you about with spreads is very similar. It's gonna show you the overall trend of what, in this case, natural gas does over the last 5 years averaged together. And it's going to show you that in relation to what you're seeing down here in present time.
Perfect.
I hope I didn't lose you guys. I mean, I'll keep talking. I can keep going.
We know that.
Yeah. No, we don't.
It's
Yeah.
like an information factory over here, just going
It's
off.
like
Yeah, it's pretty amazing.
Yeah, it's like a lot to process.
But
Absolutely.
my time is actually running out here for the stream. I usually log out at like 9 a.m. I kind of wanna let you touch base on like what kind of like educational material you provide on options and futures, because I'm sure there are a lot of people here who might be interested in that. So I think that this would be a very good base there.
Absolutely. I mean, as I mentioned, what I teach is I teach future spreads and option spreads. Now, for many people, options trading may be something that seems a little bit too complex. And so, especially if you're coming out of Forex, the best way for you to hedge Forex is by understanding and understanding how to trade future spreads. So like the spread that I showed you with natural gas, right? Or the spread that I showed you with the British pound. These are trades that are hedged. We started the conversation talking about stop losses, and as you can see, clearly I don't need a stop loss. I can place this position and allow it to run, and instead of risking taking me out of the trade because it hit a stop loss, I can continue to do what? To balance my portfolio. You'll see this position. I continuously go live on a daily basis, and you'll see this position again with natural gas. I'll probably have it on for the next 2 or 3 weeks, and you'll see how it slowly rallies with these two different contracts. Now, for anyone who's looking for this information, I'm at Talking Options on YouTube and on IG. And for any of the prices that you see, just because Raja allows me to do this, I'm gonna give you guys 50% off of anything that you want to buy. You just have to DM me, and I'll give you the link. But I'll give you 50% off of anything that you want.
So I'm at your website. So I'm at your website right now. So everything is for 50% for the viewers here.
50% off, just because of Raja.
Perfect.
So what do we say? Is it a discount code? Do we say we saw you at the?
So I'm gonna. I didn't make the code just yet. I probably should have did that before I jumped on.
Yeah.
What I'll do is the code will be Wix Don't Lie, and
all right.
It'll work in the next 2 hours. I'll make it work in the next 2 hours.
I kind of want to address the elephant here in the room. This is just for like comical purposes or whatever. There's a lot of like people have seen like your posts and stuff like that and videos on YouTube too. Like there's a lot of resentment against let's say the Forex gurus out there. What's that all about?
Oh yeah, let's talk about it.
Yeah, let's talk
about it.
Hey, Wix don't lie.
Now I will say one
Lies.
thing.
Wix don't lie. Lie.
Wix don't lie. Because he let me come on here. So I'll say that to the group right now. Wix don't lie. I'm gonna have to make a new one because Wix don't lie. Obviously, he don't lie. He don't lie. I'll give you that. That was a very high class response that you had. And again, I will be making a new one that definitely says that Wix don't lie. He obviously don't lie. But the reason why I did that campaign is because, again, 99.6% of Forex traders are not going to be able to show me 4 back-to-back profitable quarters. So there's obviously an issue here. One thing that I noticed while I was working at hedge funds and while I was networking with them is that They will tell you no portfolio manager has a full portfolio of 100% Forex. That's mostly only retail traders that are doing that. Why? Because you can't hedge your risks the way that you can with these future spreads or with these option spreads. And so what I'm basically telling you is that it's not even about your Forex guru. They're the ones who they don't even recognize the fact that this may be something that is feasible with the same underlines. But what I'm telling you is that all of these people, they need to learn how to hedge, or they are going to continue to overtrade, and their viewers are going to continue to overtrade. If you don't learn how to do something like this, where you can hedge your your directional bias, well, then you are going to blow through your account after account, and you're going to think that, oh, it's because I'm not a disciplined trader. Listen, I'm all about understanding the psychology of trading, because when you look at my page, I talk about health and wealth in the same conversation. The first thing is this: you guys are looking at blue light all day. The first thing that you need are blue blockers. You need to be wearing something over your eyes. Why? Because when you are looking at these blue screens all day, especially when you're looking at them during the nighttime, what ends up happening is that this blue light is mixing up your brain to where it thinks that it's daytime all the time. And your brain is consistently producing this serotonin. And that's the reason why many people suffer from insomnia, is because, again, the blue light is consistently telling your brain, hey, it's morning time, it's rising time. What you want to do is you want to wear those blue blockers, because it will block out the UVB light that's coming from your screen right here, and it will allow your brain to still produce the melatonin that it needs to, so that your circadian rhythms are still moving the way that it is. Many people suffer from insomnia, and also suffer from a lot of vitamin D deficiencies, because number one, they're not getting sun, and then number two, they're sitting in front of blue light like these screens all day, every day, on their phone, on their laptop, on the TV. So the main thing that you need to do is every trader needs to get a pair of what you call blue blocker glasses, because those blue blocker glasses are it's going to block out the UVB light that's going to cause your brain to consistently create that serotonin. And what is that going to do? That affects your mitochondria. That's one of the main reasons why people are seeing the effects of cancer and diabetes. It's because you're vitamin D deficient, and also your mitochondria cells, your circadian rhythms is all effed up. I mean, your mind doesn't know if it's morning, if it's rising time, or if it's nighttime. And so those things can cause cancer, it can cause diabetes, just by you not understanding what is happening on that cellular level. So it's very important for you guys, again, to wear blue blockers, because, again, did you know that you can get diabetes or cancer just by being deficient from vitamin D? These things can affect your mitochondria. Did you guys know that?
No, but blue blockers, they're like sunglasses. Like, you lost me there with the blue blockers thing.
Yeah.
The blue blockers, they actually, I have a pair right here. I'll put it on and show you guys on the camera. They look like this.
Oh, Chris got them. Look at Chris. No way. Oh my God, he's cool. Yo, I need to get one of those.
Yeah, you need a pair.
But most screens, they have blue blocking lights. There's apps for it now. What?
Yeah, because I'm always falling asleep on the.
Give yourself the double protection for sure. Because
I'm always
right.
A lot of people don't realize that they're getting diabetes because of the blue light. This blue light can affect you. This is affecting your mitochondria cells. So it's not as simple as you just saying, oh, I'm just going to block this so I don't get insomnia. No, this is part of the reason why people are getting these types of deficiencies like diabetes, like cancer. It's because they're staring at this blue light, and this is the light that your body is used to. You're not even getting sunlight. Like, you're not going outside getting some natural vitamin D. See, the reason why it's so important to see the sun when it's rising and when it's setting is because that is the time when the UVA and the UVB rays are both 50-50 in sunrise and at sunset. So that's the reason why they're very important, because the blue light is going to be, it's balanced with the UVA rays and the UVB rays.
What about 5G?
Well, that's another conversation. 5G is well, first of all, what is 5G? When they mention the fact that 5G is very dangerous, it's because they're talking about the fact that you are now at what, 60 gigahertz? 60 gigahertz is what 5G is at. Well, what also vibrates or resonates at a 60 gigahertz? Your oxygen molecule. So when you're dealing with 5G, the reason why it's so important to protect yourself against it is because it's literally at the same gigahertz as that resonates with your oxygen molecule. So this means that it is affecting you. The frequency that's coming from your modem literally manipulating. It can manipulate your DNA. When you talk about 2.4 gigahertz, that was your water molecule. Now when you jump it up to 5G, this is what? This is your oxygen molecule. So you can literally terraform someone with these different frequencies. So the main way that I protect myself away from 5G is, number one, I'm not using Wi-Fi. Everything is by Ethernet cable, which is why I'm really surprised that my Wi-Fi was giving me problems, because everything is by Ethernet cable. I do not use Wi-Fi. Everything is hardwired. Why? Because I don't want any 5G in my house, because you're already living in a box. So what are you doing? You're living in a microwave. So when you have those 5G rays coming from every direction, from your phone, from your laptop, they're literally creating a web inside your house, and you live in a box. So what happens? You're in a microwave. You're just cooking. They literally are manipulating you in real time.
You truly believe 5G is harming us?
Well, it's not about what I truly believe. I just told you the science of it. Look it up for yourself.
Well, not really. If you understand the waves that they're using on a 5G, they're not actually radioactive. So
they've been saying this
really...
since day one. Since cell phone gives you cancer since the start. Even light gives you cancer.
Exactly.
When they ran the light post, they've been saying this since day one. So why is half of the population not deceased?
What you guys are not understanding is that this is something that takes time. See, Saturn, when you talk about Saturn and the power of Saturn going into Capricorn, this is slow terraforming that's happening. Think of what you're saying with lead, right? Lead is usually in your tap water. It's in almost everything that you're drinking that is not being purified, right? Well, what does lead do? When lead gets in the body, it will go into your bone marrow. And guess how long it takes for lead to come out of the body? 34 years. Now, obviously, you're not going to see the effects when you're 17, because again, you have so much going for you. Your immune system just started to work. The reason why you're not seeing it just yet, by the way, you're going to start seeing a lot more people develop cancer and diabetes, and you will go back to this conversation. But the reason
but that's logically it will happen, because naturally we're pumping a lot more toxics, not natural products, chemicals into us. So obviously it will happen. But what I'm trying to say to you is that the waves are used in the 5G network are not radioactive. They're not like UV lights. It's just like a very strong radio frequency. You're not affected by a radio frequency. If you listen to radio, you'll never be affected. You'll never develop cancer. Yeah.
What I think people are like losing sight of. Oh, sorry, Samantha.
Hold on. Sorry. Let her talk, guys.
If you buy one of these EMF meters right here, you can actually test the radio frequencies that surround you. Look, I can take my phone. Where's the phone that I have around here? You can turn this thing on, and it will tell you the frequencies that are literally pumping away from these cell phones. Look at this. This right here.
Yeah, but those don't affect you. There's a lot of frequencies that you are surrounded by. That's important to understand what frequencies and what radioactive frequencies are affecting us as human beings. This is the point I'm trying to make. It's not the fact that you have them around you. If you listen to the radio, there are frequencies around you, but that won't affect you.
There's different frequencies.
It's a different frequency. If you go to Chernobyl, for instance, then yes, you'll be affected by those frequencies that you have over there. They're radioactive.
Yeah, Rakeel started this whole thing off with a question saying that there's an elephant in the room, and I don't feel like that's been addressed. Everyone's talking about 5G and blue light, and that's all good and well, but the elephant in the room still hasn't been addressed, I respect what you've done here. You've come on today and you've presented your case beautifully, and you've give really good information. And what you're doing there is you're creating your own niche, and I respect that. But I think what needs to be said is that Ted and Rakeel have really, really revolutionized the Forex industry. They are consistently profitable. They don't overtrade, and they've taught dozens and dozens and hundreds and possibly even thousands of people also how to really trade properly in the Forex industry. People that trade with stop losses, people that are scalp traders and swing traders, the amount of people that have gone off to start their own Forex courses or their own Forex education or their own Forex, whatever situation it is within the financial industry because of Ted and Rakeel is huge. And, you know, even today, Rakeel's allowed you to come on the stream and present your case beautifully, as I've said previous. And even still, you also have promoted your own Forex course. So I think some homage needs to be paid and some great respect needs to be paid to people like Ted, Rakeel, Chris, Trade with Monty, who has his London stream as well. What these guys are doing in the Forex industry is revolutionary. No one has ever done this before, and that's facts. You know, what they've done is they've created a space, okay? It started off very small. They created a space of transparency and clarity. And what they did with that is they continue to expand the space. And what that did is remove all of the nonsense from the Forex industry. So I understand that from the outside looking in, it might appear as if Rakeel and Ted and, you know, everything that we're doing is just kind of generic and it's the same as what Astro Forex is doing or any other type of run-of-the-mill Forex, you know, enterprise. But, you know, now you've come in here today and you've seen the way things are run, you know, I think it's really good. It would be really good for you to kind of pay absolute homage to Ted and Rakeel and what they've created here. You know, this 5G stuff and blue light, we can talk about that, but, you know, this is the elephant in the room.
You just said, like I said earlier, I definitely respect Wix Don't Lie for the way that he responded to that. I said that earlier, I'll say it again. That was a very high class response. Now,
you said it for like 10 seconds though. We need more.
Specifically, what I've just shown you today is a way that people can literally stop overtrading. Now, I hear what you're saying as far as that people have been able to learn about Forex, but it still does not go against the number that I keep talking about. You want to talk about an elephant in the room? I just said $5,000 for someone who can show me 4 back-to-back profitable quarters. That's the real elephant because I've been
on your Instagram. Sorry to cut you off. On your Instagram, you said it was 10,000. So I'm just wondering why you decreased that by half. Secondly, there's about 20 traders.
10,000. So no one has still even approached me on 10,000. I mean, what's the big difference there?
There's about 20 traders in the trap that can do that.
The point of me saying that is because, again, I'm trying to show you that 99.6% of Forex traders are going to overtrade. And the best way that you can hedge that risk is by understanding how to do what? How to trade and hedge it with spreads. That is the main point of my campaign, as I'm telling you again. Majority of traders, I don't care if they learn from whoever, if you do not understand how to trade spreads, you are not going to consistently make money on a back-to-back basis. Facts. And if someone wants to say I'm lying on that, I already said it. $10,000 for 4 back-to-back profitable quarters.
Oh, all right, I got.
Can I show you my income tax statement?
I want to say something just to cut this conversation short, since we're running out of time here. The whole reason to bring Pimenta on here was just to, like, you know, just to see like a different perspective, just to have like a different narrative on how things can be viewed. Right. After we go away from this conversation, there's going to be a lot of people who will contact you because, like, you know, they might be interested in options. I know some people, myself personally, they are interested in those things, but like there isn't any clear-cut information on how to go about that, right? So I really respect you came on, you showed your case and how you work and do things. So I think this was overall a very educational experience here that we had.
Absolutely, Raja, and I appreciate you bringing me on here because, again, I will say, Wix Don't Lie, he obviously didn't lie. He brought me on here. Hey, you guys, let this girl talk about whatever she's talking about. Maybe we can learn something from it. So
Top step trader.
Again, what I was trying to say though is the fact that we've already talked about the basics of it. A lot of this information will maybe go over some people's heads because they're hearing it for the first time. But as I said, I am willing to run this back. I'm willing to not only give people 3 months so they can learn this themselves, but I'll run this back with you guys and I'll show you 2-3 days, a week if you want. I'll show you how you can make money in the market trading these spreads and stop over trading.
Samantha, quick question before we leave. What's the starting capital to open an account with Team Corswin? because this question, I get this question from some.
Oh yeah, I wanted to ask that.
For the options, that we need more capital, and this is the fact that we can teach many people out there Forex, because for Forex, in order to learn Forex, you don't need a starting capital with $20,000 or $25,000. What's the starting capital with Thinkorswim?
So if you're you're starting off with a smaller account, the best thing to do, I think someone else shared their screen, but I want to just show you the fact that what you can do is you can start off with anywhere from 300 to you can start with trades that will require buying power right around $300. So I'd say right around 2,000 to 3,000 will get you in the door just to trade future spreads. And what you would do is you want to trade that with the micros. You'd want to trade the micro euro, the micro Aussie, the micro British pound, and you'll be able to you'll be able to use those smaller contracts with $2,000 to $3,000.
Okay, all right.
All right, so 2,000 to 3,000, right? Is investment to trade the spreads.
Yes.
Okay, got it.
If you're starting with a larger account, obviously, again, you can start with something bigger, which would be maybe around $5,000 to $10,000, and you'll be able to trade crude oil and some of the bigger underlines. But if you're starting off with just a euro and stuff like that, again, you would be able to trade those underlines, do spreads the same way by using $2,000 to $3,000 to trade future spreads.
Okay, yeah, because I live in Miami, I contact Thinkorswim Bank. TD Bank, and to open an account with Thinkorswim in order to trade options and stuff, they ask for 25 grand, So yeah, that's why. Because I know many traders out there that they don't have like $1,000 to invest in one account.
Yeah, with Thinkorswim, you won't need 25 grand. But if you're doing a trade, like say for example, you're doing something like a euro position, and you can even do intercommodity spreads with those micros. So you'll be able to trade the relationship between British pound and the euro. Like you can do a spread with these two currencies. That's actually a trade that I sent out recently. That was the British pound against the euro. And again, what you'll see is that these two trades, when you place them, looking at a 360 space time, over the next 2 weeks, you'll see the profits come in from those two underlines that you're trading together because you're looking at the seasonal divergence.
So what is your win ratio?
From the trades that I've sent you from all of the trades that I've done during the coronavirus since the beginning of 2020, 95% winners, and I can go through them if you want.
Just wondering, you say that you have at least a year consistency. What are your average returns, like percentage wise, monthly?
So what I do is on a monthly basis, I'm probably placing anywhere from maybe I would probably say up to 6 trades. And when I'm placing those trades, each of the percentages has been different, but I can show you here and we can actually just walk through some of it if you want me to. But
well, I don't need a detail because like I have over 1,000 trades, so I don't expect each individual, but I'm saying like in general for a month, 10%, 20%, 2%, what's the average monthly gains on these options?
I would say up to 30%. I would say way higher than that.
Oh, well, that's why I'm asking, because I know some people that do 300-400% a month, and I know people that make 0.5% a month. That's why I'm asking to see where you stand at.
Specifically in the last 3 months, I would say that the percentage has been more than 30%. It's probably been up to about 200% just from the long puts that I did in the market at the beginning of March. Because again,
shorting the market basically.
Huh?
Because mainly since the start of this year, you're mainly shorting the market because of all the.
I was doing a lot of long puts on the market. And so those long puts for the different stocks, because I was trading stocks heavily in the beginning of the year, and I'll probably start adding some more stock options to my portfolio this summer, especially during retrograde. But right now, what I'm allowing to happen is I'm allowing the market to keep doing the uncertainty on the stock side. But on the future side, the reason why I'm focused on this is because, again, these have a seasonal cycle to them. So it has some sort of information that I can look at on a long-term perspective that can tell me what the seasonal highs are, what the seasonal lows are.
Samantha?
Yeah.
Just a quick question. Do you have like a My FX book or like a verified track record that we could just see, just so we can like understand exactly what's going on?
Oh yeah, that's the easiest setup. Yeah.
Yeah, like what trades you've been
I love
taking.
that
And
site. Yeah, it takes in all your trades into perspective and everything. It's a real great tool to see true numbers, and so you could do better
Yeah, it
trades.
just shows a verified track record versus and
Well-
like same thing. Like
Here's the thing with my FX book. First of all, I have a video that's about to go launch. I'm going to launch it on my YouTube channel. I've already caught people frauding with that MFX book.
Well, we agree with you. We
just
agree
any
with you. There's a lot of
verified
fraud and
track
fake.
record.
To manipulate it. What I will do for you is, again, if
Bank statement.
you share my screen, I'll go through my trades on there.
Yeah, that would be great.
Actually, let's leave that for another time. I'm really running out of time. My gym equipment is about to come to my home. I have to take delivery of that.
Can I get a bank statement?
We'll take this offline still.
Yeah, let's take these comments there offline. So, thank you everyone for showing up. Thank you so much, Samantha. You came on. I really appreciate it.
Thank you, Samantha. Appreciate it.
All right, thank you. And again,
Cheers.
Thank you, Sam. I live in Miami, so probably I'm gonna contact you.
what'd you say?
I live in Miami, so probably I'm gonna contact you so we can talk.
That sounds good. And as I said, I'm willing to run it back. So thank you for having me on. And as I said,
$7,000 course.
that obviously we'll talk about the fact that, you know, Wixomai had the decency, and he was very nice enough to let me come on here to explain to you guys what is futures spreads and how you can manage with that. So I appreciate that.
That's how we are. That's how we
All
rock
right, no
over
problem.
here.
Yeah, right, we're family.
We rock. We rock.
All right, everybody, take care. Have fun.
Thank you.
Have a good weekend.
Bye.
Bye.
Bye.